Okay. So we are going to be looking at two issues, but these two issues are going to be having a lot of issues. So we are going to be looking at the first issue will be performance evaluation. Okay, which will be performance evaluation, which will be the question number one for 20 marks. Okay, mostly they will bring some question on calculation and some question on theory. So it's going to be a mixture, but you have to know that you cannot pass the management accounting paper without reading. Okay, the calculation is going to take like 60 something marks. Okay, and the theory is going to be like 20 something or 30 something marks. So you need to know the theory or the theoretical aspect of everything. Okay, those types of standard, the reason for, you have to know all those things, benchmarking, all those things. You have to you have to know them. Okay, because they are going to, the question will not be, it will not be like mathematics question. No, it will be a mixture, both calculation and theory. So you need to read a lot, and it will be the theory that is going to help you pass the exams, because the calculation, some of them you don't even know what they are talking about. So you don't really have to, or you don't only have to focus on the what, on the calculation part, but you have to focus on the theoretical aspect also. Okay. So performance evaluation will always be 20 marks, a mixture of calculation and uh, written. Then under this one, they can bring questions from any of these sides. So we can have divisional. We look at measuring divisional performance. So we look at the issue of divisional performance. So they can ask you to measure the performance of a division. Okay. If they ask you to measure the performance of a division, and the question is not asking you to measure the performance of the division as a whole, please, they are only asking you to measure the performance of the manager, divisional manager, because he is in charge of that one. In that particular case, you have to be using what we call the controllability principle. So they ask you that you should measure the performance of what? Of a division. And they are not asking you to measure the performance of a division as a whole. Then they are asking you to measure the performance of the manager. And in that particular one, we use controllability principle. We only use those items, those revenue items, those expenditure items that are within the control of the manager. So we are going to be seeing, we are going to be picking a question on that. Okay, so they can ask you for divisional performance, and we'll be using what we call the return on investment. Return on investment, which is basically like the ROSI that we know. Okay, so the return on investment, which is basically like the ROSI, they will ask you for residual income. Okay, residual income, assuming the division want to what? Want to pay a return to the providers of the fund, how much will be left after the what? The return has been given to them. Okay, so the profit minus what? The notional interest, assuming you are paying return on the what? On the funds provided by the investors, how much will be left after giving them their what? Their portion or their return. It's just like if you want to pay dividend, what will be the profit that will be left after the dividend? That is it. Okay. Then we also look at the EVA. So yeah, economic value added, which seems to be very complex to most of the students. Then they can also ask you about issues of ratio analysis. So you can do some ratio computation there to measure the performance of the division. The ratio analysis can be used for the group as a whole, or it can also be used for what? For the individual divisions. Okay. Then they will now ask you on what we call transfer pricing. Okay. So the entity is having two divisions or many divisions, and these divisions are producing what the other, or one of the divisions will be producing the input of the other division. We cannot allow the other division to go and buy its input from outside. No, we have to now what? We have to now convince them to what? To trade among themselves. If they are trading among themselves, the delivery cost that the division, okay, the buying division will be incurring if they are buying from outside. That delivery cost will not be incurred. So we are going to be saving that portion of the cost, and that is going to be increasing our revenue. So at what price with the two divisions or with the divisions trade among themselves. That's what we call the transfer pricing. So we pick one question on that and see how we can go about it. Okay. Then we are going to be looking at the contemporary approaches to management accounting. This one we are going to be having the theoretical aspects, but for now, I won't bother you with the theory, but I'll give you the areas that you have to read on this one. What we are going to be looking at over here will be the throughput accounting. Throughput accounting, which is the brother of the limiting factor analysis. Then we also look at activity-based costing. Okay, but you have to read about the ethics, what we call the ethics, the ethical principles, the threat to what? Those principles. Then we also read about what? Total quality management. Okay, total quality management, the cost of total quality or the cost of ensuring quality. Then the principles. Then you also try to look at just in time, the benefits of just in time and the principles of just in time. Then you look at what we call benchmarking and its types. So what are the types? They can ask you about the types of benchmarking. Then you also look at what we call business process re-engineering. So you are trying to cut down. This is just like a reconstruction or reorganization. So business process re-engineering. So you look at that one. You look at the value chain. So the primary and the secondary activity is very important. And what again over here, I'm sure that is all. Well, okay, we look at balance scorecard. Okay, so the balance scorecard, you look at, okay, balance scorecard introduce approach of measuring the performance of the organization from different perspectives, and the perspective are four. It's giving us a different perspective from the traditional perspective, which is always about the profit, the financial perspective of the entity. So you look at the perspective, and so they can throw you some theory questions to you on these areas. So you have to be able to do something about it. So we are going to be looking at performance evaluation and contemporary approaches. We are going to be seeing what we can do. And I'm saying that whenever they give you a question on ROSI and residual income, okay, they can give you a question on that and they will ask you to measure the performance of the division. If the question is not asking you to measure the performance of the division as a whole, what they are trying to ask you to measure the performance of the divisional manager. Okay, or if they have given you certain footnotes or certain information that are not within the control of the divisional manager, please do take those information out of the divisional profit or the cost before you measure you calculate your return on investment and also the residual income. Okay, they have been doing it in a different way first, where they'll see the entity want to introduce a new product, or they want to buy a new asset, or they want to do a new investment, and you have to advise them, okay, for now they have changed that particular style, but we have done some things on them during class, but we are coming to focus on the issue of controllability principle. Right now, they are trying to focus on the controllability principle. Okay, we use profit for these two items. Let me establish that we use profit. And the profit that we use over here is accounting profit. The question can give you cash flow. Cash flow is a cash profit. If you want to get accounting profit, you take non-cash items from the cash flow to get your profit. Basically, you will give you cash flows, and they will give you the asset, and they will give you information about the depreciation of the asset. Okay. Under the normal exam condition, the only thing that you are going to be taking from the cash flow to get your profit will be the depreciation on the asset. Okay. In the absence of any other issue, it will be only depreciation. So you take your depreciation from the cash flow to get your profit. They can give you impairment. Impairment is also a non-cash item. Take it from that particular one. They can give you provision for doubtful debt. It's a non-cash item. Take it from the cash flow. Then you have your profit. If you have subtracted, or if non-cash items have been subtracted from our cash profit or our cash flow, The end result is profit. The end result is profit. So let me establish this one. We use profit, and the profit over here is accounting profit, not cash profit or not economic profit. All right. So how do we go about the residual income and the return on investment? The return on investment, as established earlier, is just like what? It's just like Rosie. So we use profit, net profit before interest and tax, but most especially after what? After depreciation, divided by the capital employed of the entity. Okay, divided by the capital employed of the entity, multiplied by 100. The capital employed can be opening capital employed or closing capital employed. But if you are giving the two, then you find average. Okay, the best estimate should be average. Okay, but in most cases, they will be giving you only the capital employed at the end, or they'll be giving you only one capital employed. So just use that particular one. What do we mean by the capital employed? The capital employed over here is the same as the net asset. Okay, so the capital employed is how you calculate capital employed under what? Financial reporting. So this will be our shareholders fund. Okay, our shareholders fund. The shareholders fund over there will be the equity plus retained earnings plus revaluation surplus or plus any other surplus. Okay, then plus what? Long-term what? Debt capital. Long-term debt capital. The long-term debt capital over here is going to be those what? Long-term what? Loan and long-term what? Debt what? Instruments. Okay, the question can give you interest-bearing what? Debt. In that case, you use bank overdraft as part of that because bank overdraft is interest-bearing what? Liability. Okay. Why am I not saying that this is calculated as total asset minus total liabilities? The reason is that deferred tax is not a capital. Deferred tax does not what? Does not bring return. So they can give you a deferred tax in the what? Under the non-current liability. Please don't include deferred tax. The capital employed over here, we are talking about those items that if you put it into any organization, you are going to be expecting return. Those return yield what? Instrument. That is what we are calling the capital employed. Deferred tax is not what? It's not an investment. Deferred tax is not an investment that is going to be yielding what? A return. So if you are using the total assets minus total liabilities and deferred tax is part of your non-current liability, please, you are going to be getting a wrong answer. That is the reason why the capital employed over here is calculated as total assets minus total liabilities. But if you have a deferred tax, it means that you are going to be including your deferred tax in the what? In the total or in the non-current liability. And that is going to be making your answer wrong. Okay. So just know that this will be shareholders fund plus long-term debt capital. But if you don't have deferred tax in the question, or you don't have any non-cash items or any other items that which will not be giving you investment, then your capital employed now, your capital employed will give you the total assets minus total liabilities, total current liabilities rather. Sorry. So we have total current liabilities. Okay. Very important. Very important. Okay. I'm saying that if you don't have deferred tax or if you don't have any other what non-current liability, that does not give what a return. Okay. You have to now use total asset minus total current liability. Please, if you have lease liability, the lease liability is what is also considered to be a long-term debt capital because this lease liability will be attracting interest at the end of every year. It's just like any other debt instrument that will be attracting finance costs at the end of every year. So the lease liability is also treated as what? The part of the long-term debt capital if you have lease liability under the long-term over there. Okay, but since this is management accounting, nobody is going to be what? Stressing you with all these issues. But what if it happens? You should be able to do something. So we come to the residual income. Residual income, we are just saying that assuming you are making a profit of 20,000, okay? a profit that you are making 20,000, and your mom has given you 200,000 to start, and your mom is asking you that whatever amount that you are making should be taking 10%. So the residual income is after paying the 10% to your mom, how much will be left? That's what we call the residual income. So you'll be paying 10%, you'll be paying 10% on this one. That will give us 2,000. So if you take the 2,000 from this place, okay, how much will be left? 18,000. Okay. If you provided the 200,000 yourself, but the issue is if you should put the 200,000 in a bank account, it will be giving you interest at 10%. Okay. Assuming you want to take the 10% from the profit or the 10% on the, okay, sorry, not should be on the profit, the 10% on the capital, the interest will be charged on the capital. So let me reduce this one to, let's say 150,000 so that we can actually get some profit. Okay, so assuming you are providing the 150,000 yourself, you have started a company with, or you have started with 150,000. Money is personal contribution. At the end of the day, you have made a profit, or at the end of the year, you have made a profit of 20,000. Assuming you are, if you put this particular amount in a bank, you are going to be getting 10%. It means that even if you haven't started the company or whatever you are doing with the 150,000, you'll be getting 15,000 at the end of the day as what? As a return. So assuming you want to pay your return, assuming you want to pay the return to yourself, how much will be left after you have paid the return to yourself? That is what we call the residual income. So if you have paid the 15,000 to yourself, the 15,000 will be paid from the what? The profit that you have made. And the remaining balance over there will be 5,000. That is what we call the residual income. So that assuming the entity wants to pay the what? The return to the investors or the providers of fund, how much will be left after they have been paid? That particular amount will be declared or will be paid out of profit. How much will be left? That's what we call the residual income. So in this case, the residual income, you use the profit that we have calculated from the first side, which is going to be profit before interest and tax, but after depreciation minus what we call the notional interest. How do we calculate the notional interest? The question will give you the cost of capital or the required rate of return for the what? For the owners or for the investors, multiplied by the total amount that they are investing, which is the capital employed. So if the people are getting 10%, if they are giving you 10,000, they will get 1,000. That's what we call the what? The residual income. So we'll be focusing on the two for now, and we will now come to the economic value added. It was last sitting. They examined that one, but they can still examine that particular question again. So I'm not going to be wasting your time. Maybe within 4 hours at least, one question on each of them. We will be good to go. Okay. So let's pick question 1. I hope Charles is there.
Hello?
Charles, are you there?
Yes, sir.
Yeah, please, can you go back to this is your writing. Like, I want the presentation.
This thing will be shared with you after class.
Okay.
All right. Charles, let's move on.
Okay, so question number 1. Lensco manufactures lenses for use by a wide range of commercial customers. The company has 2 divisions, the photographic division P and then optometry division O. Each of the divisions is run by a divisional manager who has overall responsibility for all aspects of running their division, and the divisions are currently treated as investment centers. Each manager, however, has an authorization limit of $15,000 for capital expenditure, and any items costing more than this must first be approved by head office. During the year, head office made a decision to sell a large amount of the equipment in Division P and replace it with more technologically advanced equipment. It also decided to close one of Division O's factories in a country deemed to be politically unstable, with the intention of opening a new factory elsewhere in the following year. Both divisions trade with overseas customers, choosing to provide these customers with 60 days credits to encourage sales. Due to differences in exchange rates between the time of invoicing, the customers and receiving the payment 60 days later. Exchange gains and losses often occur. Cost of capital for LearnSchool is 12% per annum, and the following data relates to the year ended 30th November 20x6. So note, depreciation on uncontrollable assets included in divisional overheads are 320 and 460 for both divisions. And then we have non-current assets controlled by the division and non-current assets controlled by the head office, inventories, trade receivables, and overdrafts for both divisions. So, and also trade payables. To date, managers have always been paid bonus based on the return on investment, ROI, achieved by their division. However, the company is considering whether actual residual income would be a better method. So A, calculate the return on investment and residual income for each division for the year ended 30th November 20x6, ensuring that the basis of the calculation makes it a suitable measure for assessing the divisional manager's performance. B, explain why you would have included or excluded certain items in calculating the ROI in part A, stating any assumptions you have made. And C, briefly discuss whether it is appropriate to treat each of the divisions of LearnSchool as investment centers.
Okay. So they are asking us to calculate the return on investment and residual income for each division for the year ended this one, ensuring that the basis of the calculation makes it suitable. Please, I'm saying that even if the question is not telling you anything, if they are giving any information concerning the head office or any cost that will be incurred by the entity, which is a decision made by the head office, please take that particular cost from whatever cost that the division will be incurring. We use the transaction specific to the division. Okay, unless the question is asking you what otherwise. Okay, so if you want to measure the performance of the division, which is basically the performance of the divisional manager, not the division as a whole, we use the principle of controllability. Okay, what is the profit? So we are going to be excluding and including certain items over here. Okay, let's come to what are some of the items do you think have to be excluded from the calculation of the profit? What are some of the items do you think have to be excluded in the calculation of the profit?
Allocated head office cost.
So allocated was head office cost, isn't it? So how do you have to calculate the profit specific or the profit that is arising from the operations or from the decisions that are made by the divisional manager. So how do you start with this one? You start with the net profit that they have shown over here. Please don't go and re-prepare the financial statement. You don't have time. You don't have to go and say revenue, this amount, gain on sale of equipment, add or subtract, direct labor, direct material, then you come to divisional overheads, then depreciation on uncontrollable assets included in this divisional overheads. You have to take the 320 and 460, then you subtract the figure, exchange gain or loss, you subtract or you add exceptional cost for this one, then you are re-preparing what? The statement for the entity. No, that is not what they are asking you. How do you get your what? How do you get your profit? How do you get a controllable profit? How do you get a profit that has been made by the division under the what? Under the decision of what? Of the manager. What you have to do is that take their overall profit that has been calculated using the wrong figures. Those that you have to add, then you go and add back. Those that supposed not to be subtracted, they have been subtracted in terms of cost. You have to go and add back because the cost is reducing the profit. So you go and add back. So we start with the what? The net or the profit that has been reported by the entity. Although you can redo it, but please, that will be wasting your time. So just pick this profit. This profit over here is what is ascertained by subtracting items that should be subtracted and items that should not be subtracted. So we just start with the profit over here, and so let's come to the question one. That will be LearnSchool. Okay, so we come to the controllable profits for each of the divisions. So What are the division? Division what and what?
Division P and Division O.
Okay, so we have division P and division what?
O.
O. Please, for this particular question, there is no need for you to do total. You don't go there and be doing things that are not what necessary. Okay, so we come here and do our figures and move on. So we start with the profit that has been reported, isn't it? So we start with the net divisional what profit, or you can say net divisional profit before adjustment. Anyhow you want to put the English there, that is your own problem. So what is the profit for division P and what is the profit for division what?
So
Division P,
Division P is 2520
2520. Okay,
and O is 1220.
1220. So let's come here. Let's analyze the items one by one and see whether they should be what included. Gain on sale of equipment. If you read from the top here, okay, during the year, head office made a decision to sell a large amount of equipment in division P and replace with it what more technological advanced equipment. It's also decided to close one of the division's O factories in a country deemed to be politically unstable, with the intention of opening a new factory elsewhere in the following year. Are these decisions within the control of the divisional manager? Are these decisions made by the divisional manager?
No.
Okay, so these gains that are rising over here are not what? Are not a control gain. They are not gains that are rising from decisions that are made by what? Are made by the divisional manager. So the gain over here should not be included in the revenue because this is a gain on sale of what? Equipment. This particular sale, it was a decision made by the head office. The divisional manager has no say. So we call something responsibility accounting. You are saying that I should be in the store, and now you are asking me to give some items to people. There is no way you come and ask me why those items have been given to the people. No, you have asked me. But if you haven't instructed me to give those items to people, you will not help me who are responsible for the missing of those items. That is how the controllability principle works. So this is not arising from decision made by what? Made by the divisional manager. So there's no way you can what? The divisional manager can be held responsible or accountable for these particular items. Though this is supposed not to be part of the revenue for division P, but they have added it. So what do we do?
Take it out.
Okay. So we go there. Please, if you are not talking, kindly mute yourself. I will take you off as soon as you want to create a distraction to people that are learning in the morning, but they are feeling the heat. Okay, so I will just take you off. It means that this place is not what? This place is not what? Or Ghana actually is not a place that you have to be because we cannot be in stress and you still be stressing us. So we have gain on sale of what? Equipment. This decision was made by the head office. So the divisional manager cannot be held responsible for that. 400, it has been added to get our profit. So we have to take the 400 back. I hope that is cool. Okay, this will be dash. Let's go. Okay. Direct material, direct labor, those are variable costs. They are costs that they have incurred on their own. These are variable costs. Unless the question is saying something about a direct labor and a direct one also. So those are costs that are being incurred by them. Those are direct costs. Okay. Let's come to divisional overheads. They are saying see notes below. What is happening over there? Depreciation on uncontrollable assets included in divisional overheads for the two is 320 for division P and 460 for what? For division O. Okay. Must this be subtracted from the profit made by the divisional manager to determine his performance? This is uncontrollable asset.
Should we add back?
Noted.
Okay, so we have to we have to add back. It has been taken. So depreciation on uncontrollable assets. How much is it?
320 and 460.
320 and 460. Okay.
Say,
Yes, please.
please, I thought the uncontrollable, yeah, to less it. So please, why you add them back?
You thought.
Because this part is for controllable items.
Okay.
So why are we adding back depreciation for uncontrollable?
You are not part of the people adding because you are out. You said that you thought. So your thought is different from us. So you're not part of the people that are adding. Okay. We are
Sorry.
starting with the profit. What is the impact of the depreciation on the profit? It has reduced our profit. We are not starting with revenue. Okay. We are not starting with revenue. So we are starting with profit. The figure has been taken from our profit before we have this profit. So we have to go and add it back. So it means that it has reduced our profit. The depreciation has reduced our profit. So we add it back. Are you okay?
Yes, please. Yes, please. Thank you very much.
Okay. Let's be moving. Charles, what else do you think now have to be there again?
Have the head office costs.
Okay, allocated head office cost. But the exchange gain, must the exchange gain be there?
No, sir.
All right.
Before the allocated head office cost, we can also look at the exceptional cost for factory closure.
Okay. But the exchange gain or loss, must it be there? Charles, read
Yes,
here.
because
So it's arising as a result of this closing down of the factory and then selling the.
That is not we are not talking about exclusion. I'm talking about the exchange gain. The exchange gain, you need this information over here.
So I think the exchange gain is as a result of they choosing to provide customers with 60 days credit.
Yes.
So based on that, they have made that decision, and it's not from the head office.
Yeah, so this is autonomous. The division they are all going to be having their investment centers, so they have the autonomy to do whatever they want to do. But just that this one they cannot spend within a particular limit. So they are going to be selling to people. The head office cannot dictate to them. It's not the division is not a political party that you say you should not sell to NDC or NPP. They can decide to sell to anyone that they like, and they have customers outside the country, like Nigeria. They are selling to them. So it is the divisional manager that is asking them to sell. If you read up to this one, both division trade with overseas customers. Both division trade with what? Overseas customers. It's not the head office that is telling them that they should trade with those people. We buy our own thing and sell. Okay. Then choosing to provide this customer with 60 days credit to encourage ourselves. It is the division that is choosing to do this due to the differences in exchange rate between the time of invoicing the customer and receiving the payment. Exchange gain and losses often what? Okay. So this is as a result of the decision made by the manager. So he should be held responsible for why he's saying that we should be selling to those people. So you have to be accountable for that. So the exchange gain should not be added or should not be subtracted. We are off that particular line. But if you count to the exceptional cost for the factory closure, okay, the exceptional cost for the factory closure there, we have some information about the issue of the closure, isn't it? Okay, there is a certain information over here. Let me highlight this one for you. Okay, so
So that one too, we saying that it is the head office decision.
yes, please.
Because it says that division owes factory in the country is deemed to be politically unstable. So it's the head office that's making that decision.
Okay. So the divisional manager cannot be held responsible for any outcome of that particular decision. So the exceptional closure cost shouldn't be factored when we are determining the profit made by the division. And that has been taken from the division profit of the profit of O. So you have to go and also factor that particular one back. Okay. So we have the exceptional closure cost. Okay, that was a cost, so we add back. Okay. What again? Allocated what?
Headquarters cost.
Okay, so that is an allocated cost. So maybe there can
That
be
one just added back.
there can be some marketing activities that has been done for all the division and they are allocating it. That decision to market is made by the head office. So we only take those things that are within the control of the divisional manager. Okay, things that he will be held responsible for. So 680 and 1040. 680 and 1040 we add. Okay, I saw a hand up. So what are we going to be having as the profit for the two of them? Yeah, I saw a hand up.
Senior.
Yeah.
With the exchange loss and gain, they said both divisions trade with overseas customers. So is it not the division manager that is in charge of the trading with overseas customers?
Yes, that is why we are not bringing any issue. We are just removing those items that are supposed not to be captured when calculating the profit, and they have been captured. So those are the things we are removing.
The taxman will say allow.
Okay, so the gain over there, you can see that we are not bringing the gain. The gain over here is a gain on sale of equipment, the equipment that the head office has decided to sell. So we are only taking into consideration the items that should have been subtracted before getting the profit. This is the profit that they have gotten after subtracting all the items. So what are those items that shouldn't be included in the cost, and they have been included and they have reduced our profit. So we are adding those costs back. Okay, we are adding those costs back. So that particular gain should not be part. That's why we are not having a gain. Okay, we are using the profit, the final profit that they have made. This particular profit that they have made, this particular profit, how was this profit determined? They have been determined by taking their revenue and subtracting all the costs. Okay, so the 680 over here has reduced our profit, which it should not be the case. So we go and add it to the profit that this is the final profit where 680 has been subtracted, some cost has been subtracted, but the exchange gain and loss should be added or subtracted. That is why we are not even doing anything about it. Okay, so we are taking the profit that they have calculated after doing the wrong thing. So we will now adjust that profit back. What were the items that were subtracted? That shouldn't be subtracted. So we add them back to the profit that we have obtained. So we are not preparing a new financial statement for them. We don't have that time. But if you have the time to now bring revenue, you bring only this revenue, then you subtract direct material cost, subtract this one, then you come and do the 38 minus 320, 5,200 minus 460, and then you get your trading profit, your exchange gain and loss, you subtract, then you ignore this one, you'll be getting the same figure like someone who is working back. Okay, so we are not interested in doing profit or loss for them. We are only calculating their final profit by taking the wrong profit. This is the wrong profit. Some items were subtracted, which shouldn't be subtracted. So we go and add it back. They are reducing the profit. So we reverse the effect by adding back. So the gain is within the control or the divisional manager. That is why we are not factoring it into the calculation, because it should have been subtracted or it should have been deducted from their profits. That's why we are not doing anything to it. It has been taken already. So we don't do anything about that one again. Senior, I hope you are fine now. Okay, let's come to the total. Okay. Charles, what are you having for each of them?
First one is 3120. Second one, 4520.
45.
Sir, please, so,
20.
hello, sir.
Charles mention the figure 45.
4520.
Okay. Is someone talking?
Go back to the question. Let me check something. Yes, Eric, can you go back to the question? Let me check something.
You have the question, wasn't it?
No, I don't have. I couldn't print it out.
Okay.
And I'm using my phone. They're down there. There are some figures down there. I just want to. So depreciation, I saw depreciation those. Yes, these figures. Non-current asset control by head of. Okay. That's fine. These ones are capital. Thank you, sir.
Okay. So let's determine the capital employed.
Hello, sir, please. So what about the depreciation? You said the depreciation something. There's a depreciation 3 something. Forgive me.
Depreciation of how much?
No, please, back to the question again. The question, sir.
I'm there.
Forgive me. Okay. I was talking about the depreciation on uncontrollable assets, including the division, but it's captured in there. Okay.
We have added back to our profits.
Yeah.
So I can move on.
Yes, you can move on. Thank you very much.
Okay. So,
Hello, sir.
yes, please.
Sir, good morning. Sir, please, how about the exchange gain or loss? Does it also affect the profits?
No, please.
It doesn't. Okay. Thank you, sir.
Okay. Capital employed. The capital employed will also be calculated using the same controllability principle. So we only factor in those assets, those liability that were incurred or that were purchased or that were incurred under the control or under the command of the divisional manager. So what we do is the capital employed over here, they have given you the items over here. So how do you calculate the capital employed? Charles, how do you calculate it over here?
So we consider the net non-current assets controlled by the divisions, inventories, trade receivables, and then we have if the trade payables were to attract a finance cost, we would have considered it as non-current liabilities, but it's not. So we only use the non-current asset controlled by the division, inventories, and then trade receivables. Sorry.
Yes, that's what you are doing. You are calculating total assets. We use net assets. Capital employed is net assets. So what do we do?
Deduct the payables.
Yeah.
Okay. We deduct the payables and what?
The overdraft.
Okay.
I was thinking that we use the same net assets idea from FR, which
If you
considers
use the same idea, then you are still wrong. It's the same thing that we are using, and you are wrong.
So
Okay.
the net assets
From financial reporting, what do we do?
So you see, for that one, the capital employed is the
net assets will be the total assets minus the current liabilities. So the current assets controlled by
Charles, you want to defend yourself?
the divisions plus the inventory minus the payout.
Okay. So we have the controllable non-current assets. Okay. What is the non-current asset there? What is the controlled non-current asset? Division P is 15,400.
Yes.
Okay, 15,400. And the second one is what?
20,007.
2,700. Then we add the current asset, isn't it?
Yes, sir.
So inventory is how much? Receivables, 1,000
1,800 and
for the
3,000.
first one, and 3,000.
900.
Okay, 900. Okay. Then we come to the receivables is what?
6,200 and 8,900.
8,900. Then we less our what? Our trade payables of how much?
5,100 and 7,200.
5,100
Yes, sir. And 7,200.
and 7,200. Okay. Overdraft is how much?
500 and then nil.
500 and dash. So what will be
Yes, sir.
their controllable assets? What the question can sometimes tell you that the entity, the division P, has invested in additional asset. Please, the additional asset has already been captured. The figures that they are going to be giving to you will be closing figures from their books, unless the question is saying that it has not been captured. But they are just telling you the reason for the increment or the reduction in their residual income. Because if you are acquiring additional assets, your capital employed will be increasing and your return will also be increasing. So they can say that this particular entity has invested in 80 million in additional asset during the year. The capital employed that will be given to you will always be a closing balance or the closing capital employed. So it means that they have already recorded the additional investment. The reason for the additional investment is to tell you why this particular company, their return on investment might be higher than the other one or must be lower than the other one. Unless the question is saying that has not been captured, or the question is giving you a starting or opening capital employed. That is the only time that you can capture the additional investment. So you have to be very mindful of that also. What are we having?
So the first one is given as 17,800
17,800, yeah.
and 26,300.
26,300. Okay. So we can calculate their return on investment now, isn't it?
Yes, sir.
Okay. So let's come to return on investment for the two divisions. So we have the return on investment for the two divisions. Okay. So you can also do this in a table form, in tabular form if you want to save time. Okay. So you can have your division P over here. Okay. You can have your division P over here. And you have your division O over here. Okay. So what you do is you just write the ROI over here. What is their controllable profit? 3120, isn't it?
Yes, sir.
Divided by 17,800
17,800.
multiplied by 100. So you also have 4,520 divided by 26,300 multiplied by 100. What are we having?
17.53%.
17.
0.53% for the first one.
Okay.
Second one is
17.18.
17.19.
17.19.
0.19.
Yes.
Okay. So let's come to their residual income. Okay. Residual income. You can also do this in a tabular form for the two. So you come to your residual income over here, which is this one. So this is what you do. For residual income, you do it like this. You look for their net profit before interest and tax. That was 3,120, isn't it?
Yes,
And
sir.
4,520. Okay. Then you come to your notional interest over here. Okay. The notional interest is just like, okay, if these people that are bringing the money, you can say the capital employed is 17,800. If they should send this amount of money elsewhere, what will be the return that they will be getting? So as me, we want to pay them that return. How much will be left out of the profit that has been made? Okay. How much will be left out of the profit that we have made? I saw someone saying that, is it no part or I saw something like that, no part or something. Okay, please, this is, we use for this one, we use net profit before interest and tax. Okay, we use net profit before interest and tax. Why? The debt is included in the what? In the capital employed. So we are including the debt in the capital employed. So the return should also be part of what? So if we are including debt, it means that the debt holders should not receive their money before we even be including them. Okay, so we include if it should be a return on equity, then that is why you take the interest, because what will be the portion that will be left for what? For the equity shareholders. But return on capital employed, we are talking about what is the total amount that will be given to the what? The capital providers. So you cannot give, I cannot pay you your interest and I still be expecting you to get return of the money that is left. No. So the debt is already captured in the what? In the capital employed. So they should not receive their interest before we share the money. No. If you have already received your share, you have no business with the remaining amount that is left. Okay, but we only use the no part for EVA. Okay, economic value added. We use the no part. Okay, we use the no part, but the no part should be profit before interest, but it should be after tax. Okay, profit before interest, but the profit should be after tax. It means that interest should not be taken out because the debt is also captured in the capital employed. So we cannot remove the interest and still capture the debt. They cannot be part of the sharing. Okay, but we are looking for the profit after tax, but interest should be included. Okay, so you have to be very careful with what you are saying and what you are using. You go out there and say that you have you have done something, but you have done nothing. All right, let's look for the cost of the cost of capital to them. So if these people are putting the money elsewhere, how much are they expecting on it per annum? The cost of capital for Learn School is what? 12% per annum. So how do we calculate the notional interest? Okay, so these people, they are charging 12% on whatever amount that they are bringing. So if they are bringing 17,800 into the division P, how much will be paid to them as what? As a return. So that will be 17,800 stroke what? 0.12 multiplied by 26,300. How much will be the notional interest for each of them?
So first one is 2136.
2136. Okay, that will be
And then 3156.
31.
3156.
Okay, 3156. Okay, so how much will be left?
984. First one.
984.
Second one is 1364.
1364. Okay. So let's look at I'm sure they are asking for justification for inclusion and exclusion or whatever. Let's come to that place. Okay. Calculate this one, ensuring that the basis of the calculation makes suitable measure for assessing the divisional manager's performance. So you have done that. Explain why you have included or excluded certain items in calculating the return on investment in part A, and state any assumption that you have made. I hope you have explained that one already, isn't it?
Yes,
Okay.
sir.
So the same explanation that you are going to be you are going to. So why are you excluding those depreciation and those items? The same thing that you are going to be saying. Briefly discuss whether it is appropriate to treat each of the divisions of Learn School as investment centers. I hope you can remember the difference between cost center, revenue center, profit center, and investment center. They can ask you a question on those ones. So the division can be treated as any of those four. So we have the cost center. Those divisions, they only incur cost. They only incur cost. They are only set up to incur cost. Okay. It can be like production. They are only responsible for producing. They are only responsible for production. You also have the revenue center. They only incur revenue there. So it can be like the ECG, those mobilization, those revenue, or they have some divisions that whatever you are going to be doing there is to only go and pay your bill and come back. Okay, revenue center, they only what generate revenue. No cost is incurred there. But if you come to a profit center, how do you determine profit? It's revenue minus cost. So they will incur what? They will generate revenue and at the same time incur what? Cost. Okay. But if you come to the investment center is the upgrade of the profit center. The investment center, they can make profit and they can also make investment on their own. So they can also stand up and make investment on their own. But for profit center, they might not be allowed or they will not be allowed to make capital investment. Any investment, it will be the top that will buy the items from them and bring it to them. So let's look at the top here and see whether it will be appropriate to treat each of the divisions as an investment center. What do we mean by investment center? They will generate profit at the same time, make capital investment, purchase assets without the approval of the head office. So each of the divisions is run by a divisional manager who has overall responsibility for all aspects of running their division, and the divisions are currently treated as investment centers. Each manager, however, has an authorization limit of 15,000 per item for capital expenditure, and any items costing more than this must first be approved by By the head office. Okay, that's what they are telling you. So the question is still asking you whether it is appropriate to treat each of the divisions as investment center. You have to make argument for both sides. So what would be your English, or what are you going to be writing in the what are you going to be writing in the exam hall concerning this particular one? So what are you going to be writing there? What are you going to be writing? What are you going to be saying?
So with a C.
Yes, please.
Okay, so the investment centers are those centers that utilize capital to earn profits. If we can see that happening in both divisions, so we can treat these divisions, Division P and Division O, as investment centers because they use capital to generate profits.
Was that what I told you about investment center?
I don't remember your exact words.
Sina Benjamin, was that what I said about investment center? Even now.
Sneha, what is I think what is said about investment center, they they can generate profits or incur costs by themselves and also have the opportunity to invest. When you're talking about investment, it's talking about they buy the non-current assets by themselves. I think.
Are you aspiring to be a politician one day?
Yes, please.
No wonder. I'll ask you a very simple yes or no question, and you are just executing your this thing. It means that you one day be a politician. Okay, that is very nice. Okay, so I hope you be a better and a proper politician to help our country. Okay, and then
yes.
Okay, let's come here. Just what I've said about investment center right now. I'm saying that investment center, they make profit and they have the power to make capital investment without approval or without making without seeking any approval from the head office. The head office has no say in in their capital decisions. And if you read from the top there's something over here, and I'm saying that you should make argument for both sides. This particular limitation only comes in when they are not, or when the capital expenditure is is beyond what 15,000. Okay. Is someone talking?
Yeah. So at the back of the definition for investment center, we can go ahead and also make this argument that because they have been given authorization of $15,000, that will also help them to acquire some of assets and also manage it. However, there's a limitation to the point that they can only spend up to $15,000. So in effect, we can also argue against that. It does not make them autonomous in making all that decisions, because some of the decisions they need to still go back to the head office and seek approval.
Okay. So it means that whenever they want to purchase an asset beyond what $15,000, they have to seek approval from what? From the head office, isn't it? Okay.
Yes.
But what if all their expenditure will be within what? Okay, what if all their expenditure is going to be within or is going to be below 15,000?
So if they are all below 15,000, then they qualify as an investment center.
Okay.
But once an expenditure is more than 15,000, then I don't see them as an investment center again. That's arguing for both sides.
Okay. Okay. Yeah, Auntie Angela, thank you, Sina. Okay.
Based on the explanation, you said it should be based on the approval of head office. So I think it's a profit center. Since they're asking for the approval of head office.
No, they are not just the approval is not like if you want to buy something 50 pesos, you have to go and call the head office. No. The approval is to up to a limit. Okay. Within that particular limit, you are autonomous. Okay, within that particular limit, you are autonomous because you have the power to make a decision without seeking approval. But anytime that you are going to be making expenditure above a certain limit, then you have to seek what approval from the head office.
Thank you. Thank you.
So that's what I'm saying, that you should make arguments for both sides. And these people, okay, this question is not for Africans. So Africans, we can decide to what if the expenditure is going to be for 30,000, we can decide to split it into 3 and be paying the people 10,000, or we can buy the asset in bits. So you can go and buy 5,000 of the asset. But this one they are saying per item for capital expenditure. Okay, per item of a capital expenditure. So you make the argument for both sides, then you now conclude. Okay. This investment center, Charles, the way you started, the investment center, you explain what we call the investment center. Okay, investment center are those divisions that generate income and also incur costs. In addition, they also do what? Capital investments. So they have the authority to do capital investments. Okay. However, there's a restriction currently that if the expenditure is beyond what? 15,000. Okay, they have to seek approval. Okay. If they're divisioning all the items that they are going to buy, if all the assets that they are going to be buying, all the assets that they are going to be buying is going to be below what? 15,000. If all the expenditure they are going to be making is 15,000, the 15,000 is if you want to buy the item. If you want to buy one item in one transaction, it should not be more than 15,000. If it is more than 15,000, you have to seek approval. But they can actually have an asset that will be 100,000, but that asset will be what? Will be purchased in different transactions. They can purchase them 10,000 in different transactions. So the per item, they are not talking about what? They are not talking about the total figure of the asset that you are seeing. No. So if all the expenditure are going to be within a limit of 10,000, that is fine. They can be treated as investment center. But if the expenditure will be treated, or all their expenditure, all their assets, if the asset will be above 15,000, then they have to be treated as profit center. Okay. However, capital item, this is a capital item, this is an asset. Okay, this is an asset. It is possible that whenever you want to purchase an asset, the asset will cost by what? Will cost more than what? 15,000. So because the expenditure limit is based on capital item, it is possible, all things being equal, it is possible that expenditure for their items, for their assets, will be higher than what? Will be higher than 15,000. So the two divisions should be treated as what? As profit center. You make points for the two, then you now do the conclusion based on what you think will be the best. All right. Just, I didn't say that investment center is the one that utilize their this thing to make profit. No. Investment center, they incur costs, they generate revenue, but in addition, the only difference is that they make capital investment on their own. But the profit center, they don't make capital investments. Okay. Okay, what will happen here? What should I have to say about this one? Okay, this one we have solved the main question, but this one, what I will talk about this one is how to go about the divisional issue. Okay, look at this. Okay, just read this one for me.
Consequently, SportsCo is considering the introduction of a new performance measure, residual income, in order to discourage this dysfunctional behavior in the future. Like ROI, average divisional.
Just, is it my network or your own?
Hello?
Yeah, we are together.
Yes. Consequently, SportsCo is considering the introduction of a new performance measure, residual income, in order to discourage this dysfunctional behavior in the future. Like ROI, this will be calculated using controllable profit and average divisional net assets.
Okay, so we are using average divisional what? If you want to calculate, okay, if you want to calculate your residual income or any of them, you are going to be using average what? Capital employed, isn't it?
Yes, sir.
Okay. How do we calculate average profit? Or how do we calculate average what? Average revenue or average inventory? If you are giving something at the beginning and at the end, how do you calculate the average?
So you add the opening and the closing divided by 2.
Okay. So the average over here is just the opening. You can see that they are giving their opening divisional control asset, this figure, closing divisional net asset, this figure. So you just add these two and divide it by 2. That will give you your margin. That will give you your what? Your capital employed. Average what? Capital employed. That is the only thing I want to say about this one. So this also, the addition divided by 2. Sometimes Blackman will not give you this one. They will only give you the asset at the beginning. Or they will not give you any asset, but they will say the entity purchase. So they can say the entity purchase, let's say 20 million asset at the beginning of the year. And this asset will be used for what? Let's say they will say the asset will be used for 10 years. Okay. So they will tell you that the entity purchase what? At the beginning of the year, both divisions purchase assets 20 million and 25 million respectively. This asset has a useful life of what? Of 10 years. And they will tell you that entity uses what? Average what? Divisional what? Net assets. What you have to know is that average is calculated as an opening figure plus a closing figure divided by 2. So your opening net asset now is 20 million. What will be your closing net asset?
Let's see. You find depreciation. Determine depreciation and take it out from them.
Okay, so at the end of the year, this asset will be consumed by a year, isn't it?
Yes.
So it means that to be left with 9 years. So you find the depreciation. The depreciation every year is 2 million. Okay, so your opening will be 20 million, and your closing will be the carrying value. The closing is just the carrying value at the end. So 20 million at the beginning, you have used 1 year. That will be 18 million. So the 2 will now give you 38. Then you now divide it by 2. Then you get your figure.
That one I didn't know.
Okay.
But I didn't know straight.
So that is what Blackman will do for you. Okay. So the average profit, that is what you have to do over here. But what will happen over here is you will still use the same what? You will still use the same principle because they have given you a footnote here, including the fees cost at
Blackman there. Oh, my number one question.
Okay. So included in the fees cost are depreciation cost of 165, 460 for division E and division C and E, respectively. 30% of the depreciation cost in each Division relate to asset control but not owned by the head office. Division E invested 2 million in plants and equipment during the year. That one. So they say this is controlled but not owned by the head office. So 30%. What it means that 70% of the depreciation relate to asset that is controlled by what? By the head office. 30% of the depreciation cost in each division relate to asset control but not owned by what? By the head office. So the asset is being controlled by the head office, but they are not owned by the head office. So 30% of depreciation costs in each division relate to asset control but asset control but not owned by what? By the head office. Okay. So 30% will be relating to what? 30% of the depreciation is to asset that is being controlled by the head office, not the other way around, not the 70%. Okay. So this one, the asset is controlled by the what? By the head office. The asset is controlled by the head office. So 30% of the depreciation is relating to asset controlled by the head office. So that 30% should not be taken away from their profits. But the 30%, you have to find a 30% there. Okay. Division we use a straight line.
Hello, sir. So in this case, you determine the 30% and you add back to profit, right?
Exactly.
Okay.
Head office recharges all of its costs to the two divisions. This has been included in the fixed cost. This has been included in the fixed cost and amount to 620 for division C and 700 for. This has been included in the fixed cost and amount to what? 620 for division C and 700 for division E. Okay, so head office charges all of its costs to two divisions. So there's an allocation that are allocated what? Head office cost over here, 620 and 700. That should be added from the what? That should be added to the profit back also. That should be added to the profit back also. I've seen a hand there. So I have two hands up, yeah.
Yeah. Hello, good morning. Please, with the first question that we saw on the last one, the C, please, can you use the gain on sale of equipment to explain? And since division P was given us a 14 and O is given us 18,800, so can you use that one as a basis that maybe division P, since it's lower than the 15,000 they are saying, it's an investment center, and the division O is not, since it's been it will be controlled by the head office?
No, please.
Okay. Thank you.
You're welcome.
Yeah.
Yes, please.
Yeah, with the controllable asset at the beginning and then at the end. So you explain those two circumstances. So in a case where you have been given just controllable assets at the beginning without giving the one at the end, must you find the average of the controllable assets again?
No, the asset that you have at the beginning, you are going to be using it. So there will be a depreciation. Just take the depreciation for the opening figure. That will give you the closing figure.
And then should depreciation not be given?
They will give you the useful life of the assets. Okay, just let's tackle the number 3.
Okay, so question number 3. X and Y divisions are two arms of the XY group of companies. X division manufactures one type of component which it sells to external customers and also to Y division. The following information relates to X division. We have market price per component, variable cost per component, fixed cost, and then their capacity. And then division Y assembles another type of product which it sells to external customers. Each unit of that product requires two of the components that are manufactured by X division. So the following information also relates to Y division. We have their selling price, their variable cost per unit. We have two components from X and then other variable costs, fixed costs, demand, and then the capacity, all with their respective values. Then we have group transfer pricing policy. 1. Transfer must be at opportunity cost. And 2. Y must buy the components from X. Please scroll down. So required. A. Calculates the profits for each division if the external demand per period for the components that are made by X division is I, 15,000 components, II, 19,000, and III, 35,000 components. B. Calculates the financial impact on the group if Y division ignored the transfer pricing policy and purchased the 20,000 components that it needs from an external supplier for 170 cedis each. Your answer must consider the impact at each of the 3 levels of demand from external customers for the components manufactured by X division. And C. Explain 2 attributes of a good transfer pricing policy.
All right. Okay. So let's come here. So we have the group is XY, group of companies, and X divisions manufactures one type of company which it sells to external customers and also to the Y division. The following information relate to what? To X division. Market price per component 200, variable cost per component is 105. Fixed cost per a period or for a year is the period that they are producing. So fixed cost for the period is what? Is 1,375,000. Their maximum capacity 35,000. Their maximum capacity is 35,000. Y division assemble another type of product which is sells to external customers. Each unit of that product requires 2 units of the component that are manufactured by division X. Okay. So the following information relate to the Y division. Selling price per unit is 800. Variable cost per unit, that is the variable cost. If there is an internal transfer, the amount at which they are transferring the component over there will be this particular one. So 2 components from X. They are using 2 components from X, and that will be what? Multiplied by the transfer price. It's a very simple one, so don't be confused with that one. So you are receiving 2 components from the person, and the 2 components will be used to produce 1 unit. So if you want to know the cost of producing 1 unit, how much is 1 component that you are receiving? So if one is 10 cedis, then it means that a cost to produce 1 unit based on a component that you are using is 20, because you are using 2 components to produce 1, and the cost of 1 component is 10 cedis. So indirectly, the cost of producing one of the finished product of the Y is 20. 2 is producing 1, and 1 is 10 cedis. That's what they are trying to tell you over there. So let's come to their other variable costs. So they are going to be incurring, just like they are buying the raw material, but they are going to be using other material and labor to actually process that. So they will be having other variable costs apart from, they'll be having their specific variable costs apart from the one that they are having for the material that they are buying. Their fixed cost, their demand is 10,000 per period, and their capacity is 10,000 per period. Please, if they are using 2 units or 2 components of material, or the 2 components of the material that X is producing, and their demand is 10,000, how many components are they going to be buying from what? Buying from X?
20,000.
That will be 20,000. Okay. Let's come to this one, the group policy. What is the group policy here? Okay. What is a group policy? So sometimes the group will give a hint on how the transfer price should be set. But if there is no group policy, then the entity will now use a negotiated what? They will now come together to negotiate the price themselves. So in the negotiation, the seller will be making reference to what? To the price of external supply. If external person wants to supply this item to what? To this particular people, how much will be the what? How much will be the price? So transfers must be made at opportunity cost. Even if they are not saying that transfer must be made at opportunity cost, what it means is that If I can produce 10,000 and I have a demand for 8,000, the only one that I can give to you without charging you the market price is the what? Is 2,000. If you need something above 2,000, it means I have to sacrifice the demand for the external person. I can produce 10,000. Someone is placing order for 8,000. The best that I can do for you at a price that will be lower than the normal price is 2,000, because after producing the 8,000, the machine will just be there. You can just come and use it. Okay. Then I can charge you a lower price concerning that one. But if you need something above 2,000, someone is placing order for 8,000 and I have maximum capacity of 10,000. The best that I can do for you is 2,000. But if you are needing something above 2,000, it means I will be sacrificing the external demand for you. So you have to pay for that particular, you have to pay the selling price. If you don't want to pay, I will sell it to somebody. There's a market for it. I'll go and sell it to somebody. Okay, so that's why they are saying that opportunity cost. Even if the question is not saying that it should be set out opportunity cost, as far as the internal division or the internal demand is above, or we are going to be making a sacrifice of external demand for the internal demand, the person will be charging at what? At an opportunity cost. Okay, Y must buy the component from X. So Y cannot go outside, because if the Y is going outside, there might be some kind of delivery cost that they are going to be incurring. But if you are trading among ourselves, there can be no delivery cost if the two divisions are within the same area, or the group can arrange a cheaper form of delivery to them. Okay, so that will be, in one way, that will be what? That will be increasing the profit of the group as a whole. Okay, so they are asking you, record, calculate the profit for each division if the external demand per period for the components that are made by the X division is 15,000. Okay, if the external demand is 15,000, what is the maximum capacity of what? Of the X division?
35,000.
So if the external demand is 15,000, can they be able to produce all the units for what? For division Y?
Yes, please.
Okay. Okay. So what will happen is your transfer price will be based on, if you want to determine the transfer price, first of all, you ask yourself whether the selling division has a spare capacity. Okay, if the selling division has a spare capacity, okay, what do we mean by the selling division has a spare capacity? The X division, the maximum capacity of the X division is 35,000. Okay, but the external, okay, the external customers, people that are outside, they are demanding for 15,000. Okay, if this production you are doing the production in an apartment that you have rented, even if you produce 15,000, you still pay the same rent. If you produce 15,000, you still pay the same rent. Okay, so if you produce a 15,000, it means that the machine will be free, that you're not going to be using it for anything. If someone wants to come and produce over here, you can tell the person that the machine will just be there, nothing will happen. So you buy fuel. The fuel is a direct cost. Okay, you bring people, my workers will work on it, you have to pay them. You are going to be using material, you have to buy the material. But for the rent, I will still pay the rent if you are not what? If I'm not producing, I will still pay the rent for the area that I'm using. So if the selling division has what? Spare capacity, the transfer price based on the unit that can be produced from the spare capacity will always be at a marginal cost. Will always be at a marginal cost. Why? Because if the machine is not used, the fixed cost will be incurred after all. But if the machine is used, what are those costs that can be avoided? If the machine is used, what are the costs that we are going to be incurring? And those costs can be avoided. If we are not producing, there is no way we are going to be having labor costs, material costs. But you still incur the fixed cost. But because the fixed cost, whether you are producing one unit or not, you still incur the same amount for the fixed cost. You still incur the same amount for the fixed cost. So if you come here, we'll do the first one for each of the division. They have a spare capacity that can produce all the 20,000. So the transfer price will set as a marginal cost. So we come to the first situation, the profit statement. So the profit statement for profit statement for division X and division Y. Sometimes a question can ask you to do it for the group as a whole. So you add the total column as a group. But for now, it's only the two. So we come here over here and we have the figures over here. So we'll be having cost and the revenue column. So let me have division. So I'll pull division X over here. I'll have column for their cost and I'll have column for their revenue. I will come to division Y over here. I'll have column for this one and I'll have column for revenue also. So this is profit. We always start with revenue. So let's come to the revenue over here. So let's go and do some small workings for the revenue over here. Okay. Okay. So let's come to the revenue. This is the sales. This will be the sales for the division X. This will be their sales. So let me go and have, so this space will be enough. So I can go here for the second one, third one, fourth one, and so 1, 2, 3, 4. Okay. So I can do my workings here. Okay. So let's come to workings. So we look at the I. If external demand is this one, what will be the revenue? External demand of 15,000 units or components. What will be the revenue? Okay, so the revenue will be for the revenue for division X will be from external and also be for internal. The internal is the component that they are selling. So let's come here. They will be having 15,000 components multiplied by the selling price. How much is the selling price?
200.
Okay, so we have 200. So how much are they going to be having?
3 million.
So 3 zeros at the top, that will be 3,000, isn't it?
Yes.
Then they will produce the 20,000 for the spare capacity. The 20,000 will be valued at what?
105.
Okay, 105. Thank you. So that will give us how much?
I'll give you 210,000.
2,100.
Okay. We have 2,100. Their total revenue will give us 5,100. So we come over here. So let's separate it. Let's do internal and okay, we have done the internal and the external already over there. So we have the 5,100. Okay. Let's come to the cost. I hope the cost, we can do the cost over here straightforward, isn't it?
Yes.
Okay. So their cost of sales will be 35,000 multiplied by 105, isn't it?
105.
Okay.
Yes.
What are we having? They will be producing all of them and incurring the variable cost.
3675.
Okay. 3675. Okay, so this one, the column. This one, let me make the column to be only 1 for now, since we are doing workings for them. Okay, so we have division X. We have the currency here. We have division Y. We have the currency here. So their revenue. So you can say workings 1. Okay, the revenue is 5,100. And the cost of sales. The cost of sales will just be the variable cost. The cost of sales is just the variable cost. So they are going to be producing all the what? All the 35,000. They will be selling 15,000 and be selling the what? Now the remaining one to those people. So that will be 35,000 multiplied by 105. Okay. And we are getting 3675, isn't it?
3675.
Okay. So let's come to the revenue. Okay, so let's come to revenue for division. So this will be division X. Okay, let's come to revenue for division Y. So let's come to division Y. So division Y, their revenue will be for only the external demand, isn't it?
Yes, that will be 10,000 multiplied by
So
800.
they are selling 10,000 units. Multiplied by what? How much is the selling price?
800.
800.
Okay, so that will be 8,000, isn't it?
Yes.
Yes.
Okay, so that will be 8,000 here. Okay, that will be 8,000. So what will be their cost of sales? The cost of sales will be in two folds, isn't it?
Yes,
Yes.
internal and external.
So we have the transfer price. They are going to be buying from what? From division
3,000.
X.
No, the buying is 2,100.
Yes.
Okay. Then they will have other
1,400.
variable costs.
250 multiplied by 10,000.
So that will be
Yes.
250 multiplied by
10,000.
okay.
That will be 2,500.
Okay, so that will be 250 multiplied by 10,000. Okay. The other variable cost, is it per unit or per component? Or they haven't
They say
specified?
other variable cost. So they didn't say. They
So they
just
just
say
say other
other
variable cost.
variable cost.
Okay.
Yes.
Okay. So other variable cost. Okay. Other
At
variable.
at the top there, there's a variable cost per unit. So that one too is applicable to the other variable cost.
Okay. So the top is per unit, isn't it?
Yes,
Okay.
please.
Okay. Okay. Thank you. Because the other variable cost can be per component. Okay, but this one is per unit. Variable cost per unit. So per unit, we are producing 10,000. So the variable cost per unit will be that 250 multiplied by that one. What are we having? 2,500.
2,500.
Okay.
Yes.
So the total cost
Total
of sales will be
4,600.
okay, 4,600.
600.
Okay. So 4,600. So what will be their contribution?
3,400.
Okay. For
For
division
Y.
Y.
Okay, 3,400.
And then
1425. Division X.
1425. So we have the contribution. The what next?
fixed cost.
Fixed cost.
Okay. The fixed cost will give us what?
1,375 for X. And 900
1,375 and 900 for
Y.
okay.
50 for division X. 50.
Okay.
And then 2,500 for division Y.
Okay. So that is the first part of it. If the demand, the external demand is what? If the external demand is
15,000.
that particular one. So let's continue with this one again. So if the external demand is now what? External demand
19,000.
is 19.
Yes.
Okay. It's 18 components. So if the external demand is 18 components, what is the number of components that the
It's 19 components. So 19,
nine?
not 18.
Okay. So if it is 19,000, what is the maximum uh, maximum component that what is the maximum component that division X can produce?
16,000.
Excess capacity is 16,000.
So that the quantity that they can produce without cutting down the external demand is 16,000, isn't it?
Yes, please.
Okay.
Yes.
But they are going to be giving them the 28,000 because the policy is that division Y must buy this thing from division X. So it means that the external demand is now what? Our total capacity is 35,000 and the external demand is 19,000. The maximum amount that we can produce to them is 16,000. But they want 20,000. So it means that we are going to be sacrificing what?
4,000.
4,000 from this one. And that 4,000 will be valued at what? At opportunity cost, isn't it?
203.
Okay. So let's come to the revenue for, so if the external demand is now 19,000, what will be the revenue? If the external demand is 19,000 component, what will be the revenue? Let's come to revenue for division X. Okay, they'll have the external. The external, we are now going to be selling only what? Only 15,000 to them, isn't it?
Yes, please.
Okay. So we sell 15 at what? At 200. So we still be having the 3,000, isn't it?
Yes.
Okay. But if we come to internal now, the internal will be 2. The first 16 will be at marginal cost, isn't it?
105.
Okay. Then the 4,000 that we are sacrificing, we sell it to them.
That will be 1680.
Okay. So we sell it to them as if what? They are our own customer. Because we have to sell 19, you want 20. We can only give you 16,000. That will be our spare capacity. But since you want additional 4,000, it means that we are going to be sacrificing 4,000 of the external demand. That's what they mean by the opportunity cost. What are we having? 16.
2,480.
If we add it to all,
Yes.
okay, 2,000,
480.
180. So total revenue will give us what?
5,480.
5,480. So we come over here. The revenue over here will be, so we have revenue. That will be 5,480. The cost of sales will still be the same, isn't it?
Yes.
The cost of sales will still be the same. They will still be using the same capacity. So at the same variable cost, so 3,675. Okay. The revenue for division what? Y will still be the same. Do you agree?
Yes.
They are still going to be selling the 1,000. So the revenue will still be the 8,000.
Linus,
Yes, please.
let's recalculate the internal amounts, the total revenue again.
What are you getting?
16,000 times 105.
Okay. I'm getting 1680
Yes.
plus
4,000 times 200.
that will give us 800.
So both amounts.
2480.
Okay.
Okay. So let's come to cost of sales for division Y. Their cost of sales now will be reducing. So we have the transfer price will be the cost of sales for them, which is the internal purchase. That will be 2480. Then their other variable cost will still be the same. So that will still be 250 multiplied by the 10,000 that they are producing. That will give us 2,500. What are we getting?
4,980.
4980. Okay. So we come to Their cost of sales will be 4980. What will be their contribution?
Y is 3020
3,000.
and 20,
Okay.
and X is 1805,
1,000.
805.
Okay. Then we have the fixed cost. The fixed cost will still be the same, isn't it? There's no incremental fixed cost. So this will be
1375,
1375, and this will be 900.
900.
Okay. So what is the profit?
Have 430 for X, 430 for X,
Okay, 430
and 2120 for Y.
into 120 for Y. Okay. The next one is what? If the external demand is what?
35,000 components.
So if the external demand is 35,000, okay,
Components.
so 35,000. If external demand is 35,000, it means that the 20,000, the transfer price will be what?
200
200
cities.
cities.
Yeah, that will be 200 cities. It means that we are going to be sacrificing all the 20,000 for you. So the revenue will now change. Okay, the revenue will now change. So we have the revenue now. So the revenue, we can do the revenue straightforward, isn't it? That
Yes,
will be 35,000 multiplied by the 200, isn't it?
yes,
Okay, so we have 35,000 multiplied by 200. What are we having?
7,000.
7,000. Okay, the revenue for these people will still be 8,000, isn't it?
Yes,
Okay, the cost of sales will still be the same for division X. I'm sure that is okay.
yes,
3675. But the cost of sales of these people will now change. Okay, the cost of sales will now change. So their cost of sales will now be the internal
4,000
purchase.
plus 2,000.
Okay, the transfer price will now be done at the full amount because the people, there's no spare capacity and the people are buying all the components and you want to buy 20, so we have to sell to you. Okay, so we have 20,000 multiplied by 200. That will give us 4,000.
4,000.
Okay, that will give us 4,000, and the other variable cost will still be the same, isn't it?
2,500.
So other variable cost will still be 2,500. What are they having?
6,500.
6,000,
500.
6,500. So this will be 6,500. So the contribution is what?
1,005 for Y.
Okay, 1,005 for Y.
Y. And then 3,000. 3325 for X.
3325. The face cost will be 1375 and 900, isn't it?
Yes.
So this will be
1950 for X.
Okay, 1950.
50.
This
And
will be
then
600.
600.
Okay. All right. Very simple one. Transfer pricing is a very simple exercise, but very technical. Okay. So let's come to the other issue that they are asking them. Okay. Calculate the financial impact on the group if Y division ignore the transfer pricing policy and purchase the 20,000 component that it needs from an external supplier for what? For 170 each. Your answer must consider the impact at each of the three levels of demand: 15,000, 19,000, and 35,000 components from external customers for the component manufactured by X division. So this is a very simple issue. Okay, this is a very simple issue. Okay, this is a very simple issue now. Okay, Currently, if the demand is 15,000, if the demand is 15,000, okay, if the demand is 15,000, is X division making any contribution on this particular amount? Are they making any contribution on the 20,000 that they are supplying? Are they making any contribution on that particular amount? On the 20,000 that they are supplying?
Yes.
No. If
No,
the external demand,
they transfer at cost, so they don't make it.
okay. So, Charles, why are you quiet? Or you're not saying top?
Sir, I just spoke.
Okay. But from the beginning, I thought you are not.
Oh, I decided to write this time round. So my seniors were giving me the answers.
Ayo. Okay. But don't worry, everything will be fine. Everything will be fine. So let's look at the B.
Yes, sir.
The transfer pricing there is an issue on its own, but I pray that they will give you some. Just know the basic principle is that the person having what? Spare capacity. You can relate it to your real life situation and see. Okay. So let's have the external demand to be 15,000. Okay. If you want to know the financial impact, it's a very simple thing. Currently that we are using the transfer pricing, what is the contribution that division X is making per unit? They are not making any contribution, isn't it? So that is giving them what? At the end of the day, you can see that no profit is coming to the group from the transfer, from the internal transfer. You can check that as using this particular one now, you can no profit is coming to what? No profit is coming to the group as a result of the internal transfer. Can you check that? Because the revenue over here will be the same as the what? The cost over here, which will cancel. I hope you can see that.
Yes, sir.
The revenue over there will be the same as the cost for division Y. So you are the group as a whole, you are putting the two figures together. So what they are treating as revenue over here will be the same as this one. So currently, division X is not making any contribution or any profit on this amount. Okay. So if you want to do this particular financial impact, what you do is currently, what is the gain on the internal per unit? Most especially, we look at the contribution. What is the contribution on the internal transfer currently per unit? What is the internal contribution currently? There is no internal contribution, so no gain on the what? On the transfer, because they are transferring at what? At the 105, which is the same as the marginal cost. So they are not making any gain. But if they are now buying the 15,000, if they are now buying the 15,000 from external customer, what will happen?
The 20,000.
What will happen?
The cost of purchase will be higher.
They will be incurring what? Extra cost of what?
65 cedis.
Extra cost of 65 cedis, isn't it? Per unit, isn't it? Okay.
Yes.
So if they are doing this one, this will be extra cost because currently division Y is buying at 105. Okay. You are now buying at 170. It means that they have to spend what? They have to spend 65 to get that unit. And they are not what? They are not saving any cost. There's no cost savings here. They are incurring this particular amount. So what you do is, if they are currently buying from external supply, what is the cost that they are saving? What is the cost that they are saving? They are not saving any cost. They are incurring no gain, contribution on this particular transaction. The group is not having any contribution. The group is not having any contribution because the internal transfer is what? Is at what? Marginal cost, zero gain. But now they have to incur extra cost of what? 65 Ghana cedis. Okay. They have to incur extra cost of 65 Ghana cedis to purchase this particular one. What it means is that the group profit is going to be reduced by 65 per unit. It's going to reduce by 65 per every unit that these people are going to be selling. Okay, let's try that one. You confirm the answer. Let's come to group profit for these two. Add a group profit here. Add a group profit for the two, 50 and 2,500. That will give us what?
1,550.
Okay, so let's adjust the revenue. I will not do anything, but I'll bring figures over here. you'll see that this person will only be selling to external people, and that revenue will be what? Will be 3,000 for them, isn't it?
Yes.
Or let me just find contribution straightforward. It will be 200 minus this 105, and the contribution per unit will be 95, isn't it? Their contribution per unit will be the selling price of 200 minus what? 105. So the contribution per unit is 95, and they are selling only 15,000. The contribution will be 1425, the same contribution. Okay, 1425. Why the same contribution? The cost is canceling the cost over here. Their contribution will still be the same thing. But let's come to the cost of sales for these people. Let's come to the cost of sales for them, or let's look at their contribution. Their contribution will now be, let's come here. Their contribution will now be this figure. Okay, their contribution will now be this figure. Okay, what will be the total cost for these people now? Their contribution, please, we have made a mistake somewhere. Come here, this price should be one component, this price should be 150, sorry. This one, 2 multiplied by, okay, the same thing that we are getting, thank you. Okay, so the same thing that we are getting, so the same thing that we are getting. So I'm sure the time that we are calculating their cost of sales, so it's the same thing, 250 multiplied by this figure, and that will be, so each component is going to be, so 16 multiplied by this. Okay, that is the same thing. So we are doing the two at once. Okay, that is okay. We are doing the two at once. So 4,000 multiplied by 200. We are doing the component at once. Okay, so let me just calculate the contribution for this particular one now and see. Okay, let's come to their contribution over here. Okay, the selling price for one item of these people is 800, isn't it?
Yes, please.
Okay.
Yes, sir.
So their selling price is 800. They will have a other variable cost of 250. Is that correct?
Yes.
Okay. And the price per unit for this one now will be 340. From the external person will be 340. Is that correct? Per unit, per every unit that they are selling. Because one component is for 1 unit and one component is 170. So 2 components will be 340.
That's correct.
Okay. So what will be the contribution per unit for them?
$210.
That will be 210. Okay. And how many units are they selling? 10,000. So let's find that one multiplied by 10,000. Okay. So that will be 10,000. I'm having 2,100. Okay. So their contribution will be 2,100. Then they have this particular one now. Okay. Then what will be the profit for them now?
1,200.
Okay. 1,200. Okay. Let's come to the 1,200 over here. What is the what? What will be the total profit now? That will be 1,300, isn't it?
Yes, sir.
Okay. Let's look
No,
at
is it 1,300 or 1,250?
no 50 plus 250 for the group.
1,200, not 1,250.
Oh, this okay, this one is 1,200.
Yes, please.
Okay. So 1,200. And that will be 1,250 as a total for the group, isn't it?
Yes.
Okay. The profit for the group first was what? 2,550.
2,550, yes.
What is the difference?
1,300.
Okay, let's look at where the 1,300 is coming from. You can see that they are now buying what? They are buying a component which is what? 65 per component, isn't it?
Yes, sir.
They are buying extra, they are paying extra cost of 65 per component. And that one, if they want to know the amount for 1 unit that they are producing will be the 2 multiplied by 65, because one component is what? One component is 65. They are using 2 components. That will give us 130. Okay, this 130 is extra cost. So they are incurring extra cost of this one on one, which is 130 on the unit that they are producing. And that will give us 130 multiplied by the 10,000. And that will give you the 1,300 as the extra cost, that they are incurring. So if they are buying from those people now, their contribution or their profit at the end of the day will reduce by what? 130 per what? Per unit, or their cost will increase by 65 per component. And they are using 2 components to produce 1 unit. So the total cost will be 130 per what? Per unit that they are selling. So if they are now switching to the external customer, that is going to be what? That is going to be 170 against, or we can find this particular one. We can find this particular one on the unit that they are producing like this. Okay, so we look at the current cost. So you look at the current cost per unit, that will be 2 multiplied by 105. I hope you agree with that one, 210. For every unit that they are producing, they are paying 210 as the transfer price. Is that correct?
Yes, sir.
Okay. And the proposed amount that they are going to be paying. So we look at the proposed cost. That will give us 170 multiplied by 2, because 170 is per component. And how much are they going to be having there?
340.
Okay, that will be 340. They are spending what? Extra amount of what?
130.
130. So if they are switching now, please, their revenue or their profit at the end of the day will reduce by what? 130 per unit, which is the 1,300 that we have seen in our calculation there. Okay, so that is the impact, that is the financial impact. The group profit will reduce by 1,300 if they are going by this one. How do you calculate this? 130 multiplied by the units, because they are going to be incurring the extra cost. So they are producing. Okay, they are now producing at what? At extra cost of 130 per unit, and they are not getting any return on that particular one. So let's look at if the external demand is this particular one now. Okay, if the external demand is, the next one is 19,000, isn't it?
Yes, please.
Okay, if the demand is 19,000, okay, if the demand is 19,000, so currently, if the demand is 19,000, currently, what is the contribution that these people are getting on one component? What is the current contribution that what will be the current contribution? What is the current contribution? Okay, let's look at the current contribution in the group. So how much are they getting? How much are they getting now? Okay.
800.
No, let's look at per component. How much is what is the current contribution now? Oh, they are selling 4,000 to them at the 200, isn't it?
The 4,000 multiplied by 200.
Okay,
That is the
let's
800.
do this one. Let's do it on total basis, so that this thing will not be, we will not get this one. So let me do this one for you. Let's use the transfer price. So the current transfer price, the total amount is what?
For the
Total
two
amount.
divisions.
No, the current transfer price. If the external demand is 15,000, what is the transfer price? The total. The total transfer price is 2,100, isn't it?
2,100.
Okay. So let's have 2,100. Let me do it on total basis for you, so that everything will be cool. Okay. Let's come to the transfer price for the proposed now will be 1 multiplied by 20, isn't it?
Yes, sir.
How much are we getting?
3,400.
3,000.
3,400.
So the extra cost will be 1,300, isn't it?
Yes.
So the group profit will be reducing by 1,300. Are you okay?
Yes,
Okay.
sir.
So let's come to the current transfer price. Let's do it on total basis so that I will not confuse you in all. So the current transfer price will give us what? For the 19, current transfer price when the demand is 19,000. Let's go and look for that. Demand is 19,000. It is 2480, isn't it?
Yes.
Okay. So the current transfer price will be 2480. So we have 2480. So what will be the proposed one if they are buying from outside? If they are buying from outside, the proposed one will be what? 170 multiplied by, okay, multiplied by what? This one. And this will be giving them what? 3,400.
3,400.
Okay. 3,000 what? 400. Okay.
400.
So how much are we going to be getting now?
920.
920.
Okay. So I will do
The
this
profit
920.
reduced by
So the group profit will reduce by 920. I will determine this 920 for you. Okay. You can see that up to the unit of what? Up to the unit of up to a unit of 16,000, up to a unit of 16,000, the transfer price was 105, isn't it?
yes.
Okay.
Yes, sir.
Up to the unit of what? Up to a unit, so the remaining 4,000, okay, the remaining 4,000 will be at 200, isn't it?
Yes, sir.
Yeah.
Okay, so let's come here. The remaining 4,000 will be 200. Okay, let's come to this one. This one, the first 16,000 will be 170, isn't it? And the 4,000 will still be what? 170.
Yes, sir.
Okay, so you can see that this one, they are incurring extra cost of what? 65
65.
per component, isn't it?
Yes, sir.
But this one, they are going to be making a cost savings of what?
30.
A cost savings of what?
30.
30.
Okay. So what will be the extra cost now? 35, isn't it?
Yes, sir.
Okay. So this one on unit basis. Okay. On unit basis, what you are going to be saying is this one. This 35, let me see, 35 multiplied by, that will be 35 multiplied by 20. Okay. Now you might not be getting the same thing. Okay, so the total basis will be giving you the result. Okay. Total basis will be giving you your result. So we are currently saving for every 16,000, we are saving the cost of, so we are incurring extra cost of, so that will give us 60. Okay. So we cannot do it for all the units because they are different. So for this one, there is extra cost of 65 multiplied by 16. What are we having? And this one, there will be a cost savings of 30 multiplied by 4,000. So I'm sure if you do it like this, you'll be getting that
The
particular
65 times 16,000 is 1040.
10.
40.
Okay. So the extra savings will be what? The savings will be 30 multiplied by 4,000. I'm having 120.
Yes, sir.
And that will give us the 920, isn't it?
Yes, sir.
Okay. But please do it on total basis. Okay. You might not get the understanding to do what we are doing. So what is the current transfer price and what will be the proposed transfer price? So what is the difference? The difference over there will either be a gain or will either be what? Extra cost. If it is extra cost, then the total group profit will be reducing by that particular figure. Don't go and do it to know the effect. You don't have time. Just do it on what is the current transfer price that you are paying and what will be the transfer price if you want to change now. So let's come here. If the external demand is now what? If the external demand is now 35,000, if the external demand is now 35,000, Okay, what is the current transfer price? What is the current transfer price? If the external demand is this one, how much are we buying the quantity currently internally?
4,000.
Okay, that was the total revenue for them. So that was the 200 multiplied by the 35. Oh, that is 7,000, Osenia.
No, but you
The
have
transfer price
the
is 4,000.
it's
If the external demand is
4,000.
35,000, are you sure?
Yes. If the external demand is 35,000, the
If it's
division Y
35,000,
is buying
You know they
20,
are
okay,
buying
they are
20
buying 20.
components.
All right. They are buying 20, so they will sell the 15. I was thinking it will all be the 35. They are buying all the 35. Okay, so that would be 4,000. Okay, that would be 4,000. So they will sell all the 20 to them at the 200. Okay, but now if they are going to be buying from outside, what will happen? The proposed one will be what?
3,400.
Will be 3,400.
So the proposed price now will be 170 multiplied by 20,000, and that will be 3,400. What is happening there?
The group
100
profit is
gain.
increasing by 600.
So there will be an increase of what? 600 increase in group profits. Okay, increase in a group profit. So this one, the only time that they can actually get something on a group profit is this one, because you can see that all the 20,000 will be valued at what? 200. Okay, the 20,000 will be valued at 200 because all the items will be transferred at what? Opportunity cost. Okay, so and these people will be getting 170. So there will be a gain of what? 30 per component. So multiply by the 20,000. That is the 600 over there. So the only way they can actually increase is what? Is when the external demand for these people is actually what? Is actually 35,000, or they are not going to be buying any component, or the external demand is actually what? The 35,000. So it means that the full 20,000 will be given to them as what? As this one. So if they are buying from outside now, there will be an increase of 600 in the profit of what? In the profit of these people. And that will give us the group profit will be increasing by what? By the 600 over there. That is from the perspective of these particular people. Okay. But you can also do this one from this side. Okay. If this particular one, if these people are, if the external demand is now, okay, so if the external demand is now 19,000, if the external demand is 19,000, okay, the impact will still be the same because I want to look at it like this. So if the external demand is 19,000, the company will still be selling what? The company will be selling, the company will be selling still the company will still be selling the 19,000. So the 4,000 that we are losing over there will now be sold to what? Will now be sold to the external customers. So the company will still, the division X will still be receiving the revenue again, the old revenue, because the 4,000 that the division Y is not buying, which is also included in their revenue, will still be sold to what? To the external customers, and that will still be giving them the revenue. If they are not selling to division Y again, they will still be selling the remaining 20,000, which is also included in their revenue over here as what. So the revenue will still be the same, and their cost will still be the same as this one. So this will not be having any impact on the profit of what? Of the X. Okay. So that would be the financial impact on this particular one. Okay. That is the financial impact. For you to find the financial impact, just compare the current transfer price and the what? And the proposed transfer price. Any increase or reduction will increase the group profit by such an amount. Attribute of the transfer price. What is they're asking us for the
Sir,
yes, please.
please a minute. Please, can you go over the 3,500? How you got the revenue for Division Y using the demand for 3,500?
We don't have any demand 3,500.
35,000. Sorry.
If we are having the demand for division Y or X,
For Y.
why they are selling 10,000, so they will still sell the 10,000. Their demand is 10,000. They are selling 10,000 to people. So 10,000 multiplied by their selling price. That is all.
Oh, sorry. And the Division X. Sorry, the Division X.
Division X, they are going to be selling the 35,000. And the 35,000 will be sold at the market price, 200.
Okay. So you not do it like maybe the 20 at the marginal and the rest at the market price.
We only do marginal when there's a spare capacity. They have a capacity of 35,000 and people from outside are buying 35,000. So we cannot produce and sell to anyone internally because we are what? Our capacity is now utilized, it's now fully utilized. We are now going to be producing to sell to people outside 35,000, no spare capacity. We only do the marginal for a spare capacity. If after satisfying the external demand, there will be some portion on the machine or on the production capacity that will not be utilized. That is the one that we value at marginal cost. Now people are buying all the things that we are going to be producing. So if you want to buy, you have to buy at a price that the people are going to be buying, because if we don't buy, we sell it to those people. So marginal one comes in when there's a spare capacity.
Okay, so how do you get the transfer price of the 4,000 for that one? I'm kind of confused.
Okay. So we have calculated the transfer price of the 4,000. Why? The external demand is 19,000. The entity can produce only 35,000 components. The external demand is 19,000. So after satisfying the external demand of 19,000, we have a 16,000 on the capacity that we are not going to be producing, because our machine can produce 35,000 and the people are demanding for 19,000. So the machine will be there, which we can use to produce 16,000. Nobody will be taking it. So since you want to use it now, you want to use the machine, you can come and use the machine to produce the 16,000. For the 16,000, I will not take any fixed cost from you. You just buy what you need to come and produce. So you bring the people to come and produce, and you are going to be incurring your own cost. So what is the cost of running the machine? You are going to be incurring that cost. What is the cost of buying the material? You are going to be incurring it. But the rent that we are going to be paying for that particular one, we are not going to be incurring it, because even if you don't come and produce, we'll still pay the rent because we have produced 19,000. So this division Y is demanding for 20,000. So if we are giving you the 20,000, we'll be left with 15,000. But people are demanding for 19,000. It means that we are going to be cutting the external demand by 4,000. We are going to be taking the 4,000 from what people are saying that they want to buy, and we give it to you. So you have to pay the amount that the people are going to be paying. So that's why we value that one at the selling price of 200. The 4,000, they have to buy at a selling price, because they are going to be sacrificing the demand of the external people by 4,000. So you have to pay the 200. That is the 200 at the normal selling price.
Okay, thank you.
Just explain 2 attributes of good transfer pricing. Charles, are you there?
Hello?
Yeah, attributes of good transfer pricing.
Okay. So the first one is that the transfer pricing shouldn't be easily adjusted.
Okay.
And then it should suit the ability of the company to effectively use their resources.
Okay, no problem. What else do you think? Transfer pricing, attributes, characteristics, features of transfer pricing, a good transfer pricing. Just if I'm incurring a cost of 120 to produce and you are setting a transfer price at 100, what are you saying? Just I'm producing at 120 and the group is setting a transfer price at 100. What is happening there?
So it means that I will be the producing division. I will be losing that's 70 CD.
Okay, not in terms of money, in no financial aspects. How are you going to be feeling? I'm producing at 120 and you are setting a transfer price at 100. How will I be feeling within myself?
So I'll be feeling inefficient, as in I'm not able to recoup all the variable cost I put in my business.
Okay, not even inefficient. The efficient there, you are very efficient. But
You will not be motivated to produce more.
Okay, so the transfer price, okay, Charles, you have said that the transfer price should be what? Should be simplified. It should be easily to calculate. That's a good attribute. It should not be something that will be subject to what frequent adjustment. That is also fine. But the transfer price will also motivate. It should also motivate the producer. Because if I'm producing at 120, you are setting a transfer price at 100. You are not appreciating my effort, or you are not telling me to do more. So transfer price should also motivate most especially the transferring division. Okay. If I'm also producing at 120 and you are setting a transfer price at 250, what does it mean? The person who is coming to buy, how would the person feel? I'm producing at 120 and the transfer price is 250, and I can get that the same item outside 200, and you are telling me that I should still buy from what? From the person at 250 because we belong to the same group. How will I feel?
So here you are depriving me of making profit.
Okay.
You feel cheated.
Okay, so you feel like you are not being they have not been unfair. You have not been fair to you. Okay, so the transfer price will also ensure fairness. Okay, transfer price should also ensure fairness. So transfer price should be easy to be calculated and understood. Fine. It should not be something that will be adjusted frequently. That is fine. Okay. Transfer price should
There's
also
a different benefit there. My account, I have the camera.
What are you people coming? Okay. So the transfer price should also motivate, it should also be fair, and the transfer price should also ensure some kind of a divisional autonomy. Okay, transfer price should also ensure some kind of divisional autonomy. Okay, people should be allowed to determine the price on their own. Okay, the group should not be coming, or the head office should not be the one to determine the transfer price. Right? No, the people should be given that particular one to also negotiate or set their own transfer price also. Okay, so you can contribute, you can actually, and it depends on how you are saying it. So the objective of the transfer pricing can also be changed to the attribute of transfer pricing together with the characteristics. It depends on how you are putting it. Okay, it depends on how you are putting it. So we have mentioned like 4. You can change the objective of the transfer pricing to the attributes. No problem. And you can also change the characteristics. It should be very simplified. It should not be something that you'll be using. You are calculating transfer pricing and you are using calculus. What are you doing? It should not be something that every minute you call me, because of our supply has done this, so we are changing the this thing now. Our cost of production has increased. No, it should not be like that. All right. So what else do I have to do over here? Please, we are closing at 2. And okay, let's just discuss this one. And let's discuss this one. Let me go and solve some question on the one on activity-based costing and throughput. If you have time, then we come back to this one. But this one, just read the question number, this one for us. Question number 4.
So question number 4. The Dellar Group comprises 2 companies, BCO and VCO. BCO is a trading company with 2 divisions. The design division, which designs wind turbines and supplies the designs to customers under licenses, and gearbox division, which manufactures gearbox for the car industry. VCO manufactures components for gearboxes, and it sells the components globally, and also supplies WCO with components for its gearbox manufacturing division. Financial results for the 2 companies for the year ended 31st May 2014 are as follows. So we have BCO and VCO. We have the design division and gearbox division. External sales, we have sales to gearbox division. We have the cost of sales, administration cost, distribution cost, operating profit, and the capital employed for these divisions. So note, includes cost of components purchased from vehicle. Required. Discuss the performance of vehicle and each division of vehicle, calculating and using the following 3 performance measures. A. Return on capital employed. Scroll down a little bit. B. Asset turnover, and then C. Operating profit margin.
Okay. So this one, you don't have to do anything over here. They are just asking you to calculate the return on capital employed. Just how do we calculate return on capital employed?
So that's net profits before interest and tax per after depreciation divided by your capital employed, which
So
is
for the design, what will be the capital employed?
the capital employed over there. We have 23540.
No, the return. I'm talking about the return.
The
What will be the return on
So
capital?
that's 6,000 divided by 2350.
Okay. What would you for this one?
For gearbox division.
Yeah.
So that one is also 3875 divided by 32320.
Okay. Then what about the group as a whole?
Group as a whole, we have the addition of these 2.
Are you going to be adding the 2 figures, or you use the figure and calculate?
I'll just use the figure. I'll just use the figure over there.
Which is what?
7010, then divided by 82975.
Okay. So that's how you calculate it for each of them. Okay, the asset turnover is the revenue for each of them, the revenue for each of them. But the revenue for this one as a whole will be this one. For the group as a whole will be this figure divided by their capital employed. But this will be this divided by this one. Net asset turnover is calculated as the revenue over the net assets. So this one over this one. That's how we go about it. Okay. The operating margin is just the same as the operating profit over here divided by their total revenue. That is how you go about it. Then the answer that you calculate, you just explain or talk about what you have seen for the group and for the individual division. That is about that particular one. Okay. Let's pick a question.
What's the meaning of the note? The notes there, what does it mean?
No, the note is not making any sense. Okay. So,
hello, sir.
yes, please.
Okay, so the BCO, is both the gearbox and then the other one.
Okay.
So you have to calculate it individually, as you said.
Yes, please.
Because I was thinking that you combine their profit and their capital employed, and then you divide.
Look at the capital employed for the group. Is it the same as if you add the two?
I'm coming on.
No, sir.
No, sir.
So what does it mean?
So, so I think they are individual. You assess them individually. Oh.
No, don't think. What does that now? What you are getting over there? What does it mean?
Because I'm getting this one is 55, 8, 0, and then this one is. So I don't know.
Charles, what does it mean? Charles, what does it mean? They are not the same, isn't it?
Yes, sir.
Yes. They are not.
Okay, so what does it mean? You see, sometimes if you want to look for the issue match, you go and bring issues again. Okay, so Charles, what does it mean now? Now, this one, scenario is bringing problem to us. What does it mean? The figures, it should be the same because is that particular one having the two division? It should be the same. All things.
Yes, sir. I don't know. Maybe there could be that at the end of the year there was additional capital that was employed.
If additional capital is employed, it will be in any of the division.
Yeah.
And so why?
Would you say maybe
You're asking me a question now.
okay, then maybe there is another division that is not considered an evaluation over here.
No, please. That's why you are even using the could it be? No, it cannot be. Okay. The meaning is that the division is the head office itself is operating. They are also carrying operation on their own. Okay. They also have an operation that they are also carrying differently. If a head office, the head office is going to be selling on its own, and a branch will also be selling. Okay. Okay. So what it means is the head office is also operating. It's just like a head office together with a branch. You have items at the head office that you'll be buying. Okay, you have items at the head office that you'll be buying. Under normal circumstance, the external sales, if you put the two together, it should be what? It should be the same as this one. So you can see that these are two independent what? These are three independent. So this one is relating to only the what? These items over here is relating to the head office operations. So what over here is relating to the head office operations. We are not consolidating. If you are consolidating, then it means that you are going to be adding them one by one. This is the issue for the head office alone. And this is the issue relating to this division. And this is the issue relating to the division. Okay. So you have to measure the performance of the head office itself, the head office in itself. Okay. And the performance of the two divisions. So we are not putting the two figures, these are the figures from their individual statements. Are you okay? I hope that is making sense now. Yeah.
Remember, Vico is not the head office.
The Vico is not the head office.
No, Vico and Bico, they are separate divisions under a certain head office, which is called the Lagro.
Okay.
That's that Bico has another two divisions direct. That is why we are seeing the design and the gearbox division.
Okay. So
then say in that case, we shouldn't calculate for gearbox division.
No, we have to calculate for each of the division one by one. I say discuss the performance of vehicle and each division of what? Of the vehicle. So we are going to be assessing the vehicle over here like this. Okay. And this one too. I was thinking that the vehicle, okay, from what Eriko is saying. So Eriko is setting different questions and we are answering different questions. So he is saying that the vehicle, assuming the vehicle is what? Is the group as a whole. What would be the issue? You cannot combine because if you look at this place, then the vehicle is also operating on its own. That is a different issue. But in this case, they say the group itself is different from what? These two. Okay.
Senior,
Yes, please.
does it mean that we are going to calculate for the ratio? We are going to calculate for design division, gearbox division, and then vehicle,
Yes, please.
and then you compare the three.
You don't compare. You just talk about what you have seen. There's no comparison. They say you just discuss the performance.
Oh, okay.
Okay. Eriko, can we move on?
Yeah.
Yes,
Sorry,
we
we
can.
can move on.
Okay.
I initially I was thinking of something, but after reading the question again, I'm okay. So we are to calculate for each divisions of vehicle. So
Yes,
that's
please.
fine.
Okay. Okay. But don't go there and add, isn't it? Don't go there and add. The head office must be operating on its own. Okay.
Say we're noted. We're noted. I
Okay.
won't do that.
So let's come here. Let's come to this throughput. Throughput. Okay, the question two there. Yes, please.
Please, I wanted to seek for clarification on the asset turnover for the vehicle.
Yeah, we are together.
Please, I was thinking for their revenue, we are taking 15,560. And when we take the total assets, it means that it is going to be the same as the return on capital employed. Unless maybe I'm not getting it right.
You are taking what?
What I mean is that you are taking the assets turnover for the vehicle.
Okay.
It means we are taking the revenue for 15,500
Yes, please.
divided by the capital employed, which is 82,975.
Yes, please.
So what I'm trying to say is that it will be the same as the return on capital employed for the vehicle.
How are you calculating your capital employed?
Please, I'm picking profit before interest and tax to be 15,560.
That is your profit.
No.
Yes.
That's not profit. No.
So what about the 7010?
Let her
That's
talk.
not profit.
Okay, thank you very much.
What are you saying that thank you for? We haven't reached any conclusion. No? Auntie, we didn't reach conclusion on whatever. So
I picked the total revenue for vehicle. That was what I used for the profits before interest and tax.
how? Can you tell us the interesting story about it?
I have not seen it. Thank you.
Okay. Sinariko, you wanted to say something that no.
So I was trying to draw attention to where you should pick the figures from. So when it was mentioning 15,000, I said that's not the figure.
Okay. She'll come out and say she has killed the paper. Okay.
Pressure.
Let's take this question on this thing and we see, Charlie. Just let me
Question 1.
I'm coming. I'm checking which of them I should solve first. Okay. But I think I can solve the two within. Okay. So let's take the one. The one is the two there we have solved that one in class, so we can actually go. Okay, just take the one for us. Let's see.
Okay, so question number 1. Braintime manufactures 4 products, A, B, C, and D. Details of sales price, cost, and resource requirements for each of the products are as follows. So as the preamble just said, so machine time per unit, we have labor time per unit, and we have weekly sales demand, also in units. Machine time is a bottleneck resource, and the maximum capacity is 400 machine hours each week. Operating costs, excluding direct labor costs, are 1.740 Ghana cedis each week. Direct labor costs are 12 cedis per hour, and direct labor workers are paid for a 38-hour week with no overtime. So required: A, identify the quantities of each product that should be manufactured and sold each week to maximize profit using a throughput accounting approach and calculate the weekly profits. B, calculate the throughput accounting ratio of these profits, maximizing level of output and sales.
Okay. So this one, they are asking us to use what?
Use throughput accounting.
Okay, and calculate the what? The weekly what?
Weekly profit.
Okay, so the throughput accounting, we rank the product based on what? Based on the throughput per what? The throughput contribution per the limiting factor or the bottleneck. It's just like the limiting factor, but the limiting factor we use all the variable costs. But if we come to throughput, the only cost that we use is what?
Material cost.
That is a material cost. Okay. So let's come here. Let's find our throughput contribution before. The question is telling us that so let's come to the question number 1. Okay. So what we do is that we are going to be finding a throughput contribution, the throughput contribution for each of the units. So throughput contribution. Okay, so let me make a throughput contribution. Throughput contribution per the bottleneck. Okay, which will be so with this, what we are going to be using. It's just like limiting factor, where you look at the contribution that you are going to be getting, and you look at the contribution that each of the product that you are going to be, or each of the limiting factor you are going to be using to get that particular one. So how many products do we have?
We have 4 products, A, B, C, and D.
We have the products here, A, B, C, and D. What is their respective selling price?
1.4, 0.8, 1.2, and 2.8.
Just take it, have mercy. So 1.4, 0.8,
1.2,
1.2,
and 2.8.
and 2.8. Okay. So what would be their material cost?
Material cost 0.6, 0.3,
The material 0.6,
0.6,
0.6,
0.3,
0.3,
0.6 again,
0.6,
and 1.
and 1. So what will be their contribution per unit? Throughput contribution per unit.
First one is 0.8.
Okay, 0.8.
8.
And 1.8. Okay. So please, you cannot just stand up and say they should produce D first, then they should produce A first. No. They are using different machine hours. So you cannot compare a work that is going to be giving you 10,000 Ghana cedis for 5 hours with a work that will give you 8,000 for 3 hours. No. They are going to be using different duration. So the best is to find how much you are getting per hour, or how much you are getting per the input, or per whatever you are going to be using to do the work. So let's come here. Machine time is a bottleneck resource, and the maximum capacity is 400 machine hours each week. Operating costs, excluding direct material costs, are 140 each week. Direct labor costs are 12 cedis per hour, and direct workers are paid for a 38-hour week with no overtime. So they are saying over here is that the machine hours is what? The machine time is the bottleneck, and the maximum capacity is what? Is 400 machine hours. Okay, since they have mentioned the bottleneck for you, you cannot you can decide to check whether it is true, but they cannot mislead you with this particular one. Okay, but sometimes they will not give you the bottleneck. So you have to check whether the labor hours is the bottleneck or the machine time is the bottleneck. You can see that the time are given to you in what?
Minutes.
Okay. So this the machine hours is given to you in what?
Hours.
Okay. So the best way to go about this one is that please don't change the minutes to hours. Just change the hours to minutes. That's the best way that you can go about this one. Because if you are changing the minutes, you'll be doing 2/60, and that will be so. One thing about exam is that if you are doing the work, you are getting decimals, you feel like you are wrong and you'll be frustrated. Okay. So just be doing it and be getting whole numbers. Although you might be wrong, but the view will be very high. Okay, so let's change this particular one to, let's just change the machine hours to what? So let's change the machine time. Okay, let's have the maximum machine time there. That will be 400 multiplied by what? 60. Okay, so let's change
24,000.
24,000
minutes.
Okay, so with this one, the total minute that we have available is 24,000. Let's look at the required time if we want to produce all of them. Okay, so let's come to product A. Product A, if we want to produce all the demand for product A, we are going to be using how many minutes of the machine time?
That would be 5 multiplied by 2,000.
Okay, we are using 5 minutes to produce 1 unit. So if you want to produce a 2,000 units, that will be 5 multiplied by 2,000, and that will give us 10,000 minutes, isn't it?
10,000.
Yes, sir.
Yes.
Okay, so you have 10,000. Let's count to material B.
That would be 2 multiplied by 2,000.
2 multiplied by
2,000.
Okay, that will give us what? 4,000, isn't it?
4,000.
Okay, let's see. Is
Is 3 multiplied by 2,500.
Okay, that will give us 7,000.
500.
Okay, let's go to the D.
6 multiplied by 1,500.
6 multiplied by 1,500. That will give us 9,000, isn't it?
Yes.
The total required time is what? How many minutes?
30,500.
30,500.
Okay, 30,500. So this one they have given you the bottleneck now. What it means is that you cannot produce all the units that you want to produce. So how do you produce? Which of the unit do you have to produce first to maximize your profit? That's what they are trying to tell you. Sometimes they will not give you the bottleneck, but they will give you information on the machine time and also the labor hours. So what do you have to do? You just have to check which of them will be what will not be enough for you. Which of them will not be enough for you, or which of them is limited to whatever you are coming to do. So the limiting factor under throughput accounting is called bottleneck. Okay, limiting factor under throughput accounting is called bottleneck. So we need 30,500 minutes to produce all the unit that we want to produce, all the quantity of the various products. But we have only 24,000, so we cannot produce all. But do we have to just stand up and produce anyhow? No. We want to look at if we are producing 1 unit, the 1 unit that we are producing over here, come here. You can see that the 0.8 is per 1 unit of what? Of product A, isn't it? The
Yes, sir.
0.8. But how many
Yeah.
minutes are we using to produce product A?
5.
It's 5, isn't it?
Yes,
So
sir.
we ask ourselves now, so for every unit that we are using, what will be the contribution that we are going to be getting? So you find your distance by the bottleneck. So you divide this one by the bottleneck. Plus, you cannot compare them like this because this is 5 minutes, this is like 2 minutes, and this is also a different minute, and this is also a different minute. You cannot compare red with green. You cannot compare millimeter with what? Meter, unless you change all of them to the same unit. These are in what? These are per unit, but we are having different what? Time that you are going to be using. You cannot compare them. Something that is giving you 0.8, you are using 5 minutes. One is giving you 0.5, you're using 2 minutes, and you are saying that the 0.8 is higher than the 0.5. No. You only can do comparison if they are having the same what basis, the same units. So you just find the contribution per the minute. They'll all be in per minute now, so you can compare. Okay, so we now have divided the bottleneck divided by the contribution divided by the bottleneck. So we do division over here to be 5 per each of the units that we are using. And that will give us 2.
Yeah, Linus.
Yes, please.
As far as all of them are in units, listen, the meaning is per unit, and then the contribution to is per unit. Can you just multiply to instead of dividing? I think the end result will be the same.
Can we just multiply by?
Like you can multiply the 0.8 by the 5 and then 0.5 by the 2.
Okay.
Or you will not.
No, you get the same
Then
answer, but I want to know what you are looking for.
like where you want to check on which one you produce first.
Me, I'm looking for
Based
the
on
contribution per unit. Okay.
yes.
For you, what are you looking for? I want to understand your own before we move on.
I'm also looking at the contribution per unit to know that which one will you produce first. Which one is giving you more
You are looking for
contribution
contribution per unit again. The 0.8 that they have
per
given.
bottleneck. Per the bottleneck.
No, if I'm looking for contribution per bottleneck, that will still be the 0.8 divided by, because we don't get per. If you want to have per the contribution per the bottleneck, this one over here is not what? It's contribution per the unit. Okay, contribution per unit. And you are using 5 minutes to produce 1 unit. So if you want to know the amount that you are going to be getting per what? You are looking for the amount that you are going to be using per the bottleneck. That will give us what? Okay, 0.8 multiplied by 5. That will be the contribution per the bottleneck. I'm looking for the contribution per 1 unit of the bottleneck. That's what I'm looking for.
Okay. So I get what you're saying. So let's continue.
Okay. Okay. So the contribution per 1 unit of the bottleneck, let me put it like that. Contribution per 1 unit of the bottleneck. But if you are multiplying, you are getting the contribution for the 5 minutes. So am I making sense to you?
Senior, you can continue.
Okay. So what am I getting?
0.16.
0.16. Okay.
0.25.
This will be divided by 2. 0.25.
0.2.
Okay. So this will be 3. 0.2. And this will be what? The last one was
0.3.
Okay, that will be 6. So this will be 6. 0.3. So what I'm getting over here is what? Contribution for per every 1 unit that I'm using. That's what I'm getting. Okay. But I'm trying to process your one. The 0.8 multiplied by the 5. 0.8 multiplied by the 5. You are using 5 units to produce. And using a 5 unit to produce is 0.8, and you are multiplying again.
So I think that his approach will not get us the per unit, or maybe let's assume it per hour, because when you multiply by the minutes, you have not per the requirements. We are looking for contribution per limiting factor.
Okay.
So when you multiply by those figures there, you are not solving that that unit.
Okay. There are so many ways to kill a cat. Let me try for 0.8 multiplied by 5. I'm having
Hello.
3. Yes, please.
Hello.
Yes, and I'm with you.
Yeah, so I'm thinking that since they say per minute, you take the 5 divided by 60, you get 0.08. So
Okay.
that will be for the distance. So when you get that one, then you now divide that one by the 0.08. Then you will now be getting, I think that's how we are going to make headway. But if you have to go this way, we'll crash.
No. What you are doing is you are finding your contribution per hour.
No.
The 5 minutes, if you do it 5/60, that's what you are saying, isn't it?
Yeah, to get this in the per unit.
If you do the contribution 5/60, what are you getting? You are getting the what?
0.08.
That is the hour required to produce
That is
one.
the hour.
5/60, that is the hour required to produce 1 unit. The 5 is minutes, and you are doing 5/60. You are getting what? You are getting what we call the hour required to produce 1 unit.
So I've multiplied by what you were saying. So the first one was 4, 1. Then we have 1.8 and then 10.8.
Okay.
So if you are doing the ranking, it will be wrong.
It will be wrong. Yeah, after that one is also wrong.
Yes, it will be wrong. Because the 10.8 will be the first. Then you go to A. Then you come to C.
Okay.
And then before you go to B. But
what our brother is saying, that was what you are doing the last time, and
I remember.
I was telling you that is going to be a waste of time for you. Okay.
Yes, I remember.
He's changing to hours now. 5/60, you are changing the minute to hour.
Yes.
You are changing the minute to hour. Okay.
But it's the same thing.
All right.
It's the same thing. Just that this approach is simple.
It's just the senior who is saying that 5/60 that you crash. Okay. What it means is that all the questions that you have been solving, you have been giving the bottleneck or whatever you have been giving in hours. Okay. You have been giving that in hours. That is why you are going that. So if you are doing 5/60, you are changing. You are not looking for what? The contribution per the bottleneck. You are looking for the what? the hours that is required to produce 1 unit. That is what we are doing. 5/60 is hour. Okay. But since all these things are units, you don't have to change to hours again. If you divide anything by the unit, you are finding the contribution per unit. So all of them are in units. You can compare them now in units. Okay. You can compare them now in units. And what our brother Benjamin is saying after that one is giving us a different thing. Okay. So don't go there and try that one. I don't know what you are looking for, because the 5 minutes is the five, we are using 5 minutes to produce 1 unit, and you are still multiplying to get the. Okay, maybe I'll WhatsApp you after this one, so you can explain to me better. So which one are we producing first?
So that's B.
B.
Right. C.
Okay, so this will be first.
First, and then the B is second.
Okay, second.
C third, and A last.
Okay, A will be the fourth one. So this is how we are going to be producing. You can't just stand up and produce anyhow. So let's calculate if you are producing the C now. What if you are producing the D? So let's come to our production plan. The question can ask for optimal production plan. Okay, optimal production plan. Then we are producing what? We have the product here. Okay, we have the product here. We have the demand, the quantity that we are producing, and we have the what? The minutes, or let me put minutes over here. And we have the total minutes that we are going to be using. So we are producing D first, isn't it?
Yes, please.
How many quantity of D?
1,005.
So that will be 1,005 at what?
5 minutes.
Is it 5 or 6?
6
6 minutes.
Okay. Because I'm trying to be like Charles, so I'm having the figures of it. Okay. So the second one is what?
Is B.
Okay. And the demand is what?
2,000.
2,000, and we are using
2 minutes.
2 minutes. Okay. So we have
C. We go to C.
okay. C.
Its demand is 2,500.
2,500 at 3.
Okay. Please, if you are doing it, you have to be adding the minute to see whether you have some of them available. So
Yeah, we have available.
2,500 against 3. Okay. So if you add all, what are you having?
20,500.
So we left with 3,500.
3,500.
So we have 3,500, which will be for the A, isn't it?
Yes, please.
Okay. So A, we are going to be using 3,500, and how many?
At 5 minutes.
Okay. So we are going to be producing
700.
So you produce 700. Okay. So this one, at the end of the day, you can have your 240,000 over here. How many units are you producing in all? What is it?
6,700.
Okay. So this one you can leave it over here. You can decide not to total, or you can only total this side, because this one the units are different. They are different products. So you can only total this one and move on. But sometimes you also find the weighted. You can sometimes find the weighted minutes that you are going to be using, the weighted average of minutes that you are going to be using. Okay. But you can just total it over here and move on. The question is asking us to find the weekly what?
Profit.
Okay. The weekly profit. We can find the weekly profit in a very simple way over here, isn't it?
Yes, sir.
Okay. So look at the weekly profit. What you do is just calculate it like your normal profit. Okay. So let's come to the weekly profit over here. So the weekly profit. The weekly profit. Okay. So our weekly profit statement over here weekly profit statement over here. We have the product over here. We have our A, we have our B, we have our C. So you just put the individual product that you are making. A, we are making 700, isn't it? So you just put the demand over here. So A, we are making 700. B, we are
700,
making 2,000.
2,000,
Okay.
2,500, and 1,005.
1,005. So what you do is you find your what? You just find your normal contribution, like how you find normal contribution. Then you multiply the contribution by the unit that you are producing, then you subtract. So let's come here. We have the selling price for each of them, or you can start with the throughput contribution. You have calculated the throughput contribution already. Throughput contribution is 0.8, isn't it?
Yes, please.
Then you just
Yes.
subtract. Okay, so you can start with that one because you have done workings for that one already, so you don't have to come and show anything. But let's start from scratch. So 0.8 and 1.2 and 2.8. Okay, so we have the material cost now per unit.
0.6,
0.6. Okay,
0.5,
0.6,
0.6,
0.3,
3,
0.6.
0.6, 1.
This will give us 1. Then we take the labor. This one we are doing normal profit, not we are doing normal profit, not what? Not the throughput profit. We are doing normal profit. What will be the profit arising from all these what? All these process. So we go there and look for what? Our labor cost per what? Per unit. So what is our labor cost per unit?
0.4,
Okay, so we have 0.4.
0.2, 0.4.
So labor cost will be 0.4, 0.2. Okay.
4.4.
0.4.
4 again.
Okay.
And 1.
And 1 Ghana cedi.
Yes.
Yes.
Okay. So what will be the contribution per unit?
The first one is 0.4.
0.4. 0.3.
0.3.
Okay, the first one is what?
0.4.
0.4.
Okay. 0.4.
0.3.
0.3.
0.2.
Okay, 0.2.
And then 0.8.
Okay. So let's now find total contribution. We have the demand at the top there. So this is a contribution per unit. So you can just close it over here and find your total contribution. What will give us our total contribution?
First one is 280.
280.
600.
600.
500.
500.
1,200.
1,200. You should have done total column because the operating expenses that you are going to be having, which is a fixed cost. Okay. The operating cost, excluding the labor cost, are what? 170 each week. So this one, we assume that they are all what? They are all fixed costs. So 170 each week. We are doing the what? The weekly what? The weekly profit. So let's total the what? The profit over here and take what?
That's
The total from it.
25.8.
Okay. So our weekly profit now. So we should have done total column there and just send the fixed cost over there. So that will give us the total contribution. If you put the total contribution together, what are we having?
2,580.
2,580. Then we subtract our fixed cost, which is the operating cost of 1,740. What are we having?
840.
840. Okay. 840. So that is the ranking. Okay. The question is we should find what?
Net profit.
We should find the throughput accounting what?
Ratio.
Okay. Throughput accounting ratio is what?
Is the
Contribution per
Contribution
bottleneck over
per bottleneck over
factory
this
throughput
cost.
per
cost per
bottleneck.
bottleneck.
Africa and root learning. Hey, see how you are memorizing the thing. See how you are reciting the thing like a point. Contribution per bottleneck divided by the fixed cost per the bottleneck.
Bottleneck.
It is fine. It's not your fault. Okay. So what do we use a throughput accounting ratio for? What is the essence of the throughput accounting ratio?
To determine, I think, to determine the return per one.
So yeah, one good thing about you. One good thing about you is if you know the thing, you talk with confidence. Okay. But the time that your voice will be down, it means that the gods are not to be blamed. Okay, so we have gotten the throughput contribution already, isn't it? So we'll be doing this one. I will show you how to do it on total basis too, and how you can do it on what? On the how you can do it on what? On unit by unit what basis. Okay, someone is saying that to determine the profit in the short term before production. Okay, so in the short term, are you not going to be producing? Yes, Emmanuel, you said to determine the profit in the short term before production. In the short term, are you not going to be producing? Okay, so yeah, so can you, because to determine the profit in the short term before production, before which production? Okay, so the throughput over here is the throughput return. Okay, let me see. Let me see the throughput return over here. Okay, so it helps management to make decision in the short term. So why were you adding the before the production to it? So we have the throughput return over here. Okay, throughput return. Okay, over the return or the factory. And just see the factory return or whatever. Okay, we will calculate that one. So return per the factory hour or whatever. Okay, so let me just say the factory return. All of this multiply by, do we multiply by 100?
No.
Okay.
No.
You don't multiply by
Do
100.
not multiply.
Okay.
Leave
So
it
what?
as it.
Okay. So let's come to this one.
Linus,
Yes, please.
the denominator is not the cost per factory hour rather.
And do you know what I'm saying? The factory return. Did that define the factory return for you? Auntie Vic, was the factory return defined? Auntie Vic, are you gone? Okay. So let's.
It's around.
Okay.
I'm here.
So did I define what I mean by the factory return?
No, please.
So what are you saying?
I just want to understand what you mean by factory return. That's what I'm asking.
So if you want to understand,
This is first cost.
why will you be challenging what I'm saying? You ask me, oh, what is the meaning of that? Is it not this one? It's a yes or no question. So how do I explain to you? Okay. So let's come to the factory return. The factory return, we just look at the factory cost. What do we mean by the factory cost? all other expenses except material cost. So under the throughput, the only cost that is variable is material. So labor cost will also be what? Labor cost will also be what? Will also be treated as what? As a fixed cost. The only cost that we are consuming, the only cost that we are incurring is the material cost. You see that the labor cost will be passed to the final consumer because the labor cost will be part of the conversion cost. So the only cost that we are going to be incurring is what? It is the what? It is the material cost. But if we want to sell, then it means that we have to convert what? The material. So the conversion cost is seen as a cost incurred to transfer the what? The material to what? To the final consumer. So they are all treated as conversion costs. So let's come to the labor cost over here, or let's come to our total fixed cost or operating cost. Okay. Our total fixed cost or operating cost. We have the operating cost without the labor cost, and that is how much?
1,740.
740. So we now calculate the labor cost for, please, unless the question is telling you that the labor cost is calculated on a budgeted on what? On annual demand. We still treat the labor cost as if it's a variable cost because the quantity that you are producing will determine the what? The amount that you are going to be paying to the people. So we count the labor cost over here. The labor cost will be calculated. Labor cost will be incurred based on the quantity that you are producing. So we have the product over here, product A. How many quantity are we producing? 700, isn't it?
700.
Okay. Multiply by the labor cost per unit. That is 0.4. Okay. So what are we getting as a labor cost?
280.
Okay, that will give us 280. So we have the material B. How many quantity are we producing?
2,000.
2,000.
Multiply by 0.2.
0.2. What are
Give
we
us
at?
600.
That will give us
400.
400.
Okay, so let's go to material C. What is the labor cost?
Would be 1,005.
500.
Okay.
Multiply 0.4.
2,500 multiplied by 0.4.
That will give you
I'll give
1,000.
it 1,000.
That will give you 1,000. Okay. If these figures that we have been writing, like we should have seen some before. Sorry. The D is what? 1,005
This
1,500 times
1,500
1.
multiplied by 1. So that will give us
1,500.
okay. Total is what?
4,920.
Plus the 17
I should add a
Yeah, let's add.
1,740.
Yeah, they are all breaking.
Yes.
We get 4,920.
Yeah, so 4,920.
4920, isn't it? Okay. So that is our factory cost. So what we do for the factory cost is what? Okay, for every 1 city, the factory cost is a fixed cost. Okay, and the fixed cost is going to be based on the fixed cost is going to be based on the total what? The total hours that you are using. Okay. Someone might be wondering why the labor cost is calculated based on the what? On the unit that they are producing. Please, in actual sense, we are still doing this cost for what? 24,000 units, isn't it? Because this is how we are producing the 24,000 units. So the question is, this is the operating cost or this is the conversion cost that we are going to be incurring. So we want to compare for every unit, this is what we are getting. For every unit that we are producing, we are getting 0.6 per unit. Okay, we are getting 0.6 per unit. We want to ask ourselves, what will be the fixed cost per minute? So for every minute that we are using for product A, we are getting 0.16. What is the fixed cost per unit also? Is it okay for us to produce? Are we going to be getting more return than what? More return than spending. So this is what we do. You come over here and have 4920. Since you are calculating your throughput return in minutes, calculate your fixed cost per what? Per the bottleneck also in minutes. What are we having?
0.205.
0.205.
So 0.205. Okay. So this is what we have now, 0.205. So I will calculate the contribution for throughput contribution for each of the what? Each of the items, and I'll do it for the total too. You pick the one that you are okay with. So let's count to the first one. So we have 0.16, okay, divided by 0.205. What are we going to be getting?
Hello, sir. Please, a minute. I think I saw machine. I don't know whether the question.
Machine is
So I saw
400.
machine.
We have changed the hours to minutes. Machine time is the bottleneck and maximum capacity is 400. We are doing everything in minutes.
No. In terms of the fixed cost. There was a
No.
machine.
In terms of the fixed cost, then there's no information relating to machine.
Oh, okay.
Machine, they are not giving us any information about the machine. We don't have the cost. There's no cost for the
Yes.
machine. Okay. If there should be a cost for
Oh.
machine, then we look for the cost of running the
We
machine.
will determine the.
Okay. So what are we having as this one?
0.78.
0.78. Okay. This one, as soon as you have something like this, you can advise the company not to produce, because if we are producing, the return that we are getting for every unit that we are producing is 0.16 against the cost that we are going to be incurring for what? For running the machine. Okay, that is going to be very low. This is a cost of running the machine per minute, and this is the return that you are getting per minute. You are going to be losing if you are what? If you are producing. So let's count to the B over here. The throughput before you advise the entity. Yeah.
But if you use the 0.205 as the cost, is it going to be fair? Because when we take A, for instance, even the labor cost is only 280, and the fixed cost is 1,740.
The fixed cost will be spread among them. The fixed cost will be spread among the product.
Yes, very good. But what of their respective fixed cost, which is the labor cost?
Their respective fixed cost, which is the labor cost.
Yes.
The fixed cost that we are going to be incurring, which is the operating cost. Why are we incurring that? We are incurring that because we want to produce.
Yes.
Okay, so their respective labor cost will be a cost charge against their revenue, and
is
also
stipulated.
the allocation of what? Of the fixed cost that will also be charged against their what? Their profit that they are making.
Yeah. So what I'm trying to put across is that if you take A, for instance, the respective labor.
Oh, sorry.
All right.
Oh, it's not okay. The respective.
respective, yes, cost, which is the labor cost, is only 280.
Okay.
And when we add it to the 1,740, we will not get the 4,920. So it means that for one particular product, we're putting all the labor costs together, in addition to the operating cost, before we are determining the fixed cost for one particular product. And in the actual sense, you realize that for product A, 400, 1,000 and 1,005 shouldn't be part of their fixed cost, because that is not those costs are not in relation to them. What I'm thinking is that the throughput accounting ratio should be calculated as one, or for the whole group as one, not for the individual products. Because if you want to compute for the individual products, the answer you'll be getting, the explanation you'll be giving might be wrong or might be misleading.
Now the throughput accounting ratio, we do it on individual basis. I can also do it on total basis. Okay.
But Snealana, you see, what he's saying is that for product A, we are producing only 700 for product A.
Yeah.
And then the fixed cost for the total group is 1,740.
Okay.
And then the total unit that we are producing is 6,700. So if you are to the fixed cost excluding the direct labor cost is 1,740. So if you are to like
Allocate.
allocate the 7,740 to the 4 products, it means that the total production is 6,700, and then only A is 700. So it's going to be 700 divided by the 6,700 multiplied by the 1,740 to get a fixed cost particularly related to A, and you add it to the direct labor cost to get the total fixed cost for product at A. So if you are going to do the individual, that's why I think it should be, but I don't know. I stand to be corrected.
Why will
Per
you
what he's saying.
why will you talk with confidence and say you stand to be corrected again? So it means that you are not sure of
Per
what
what
you
he's per what he's saying, but you are a senior here, so
No, it's not a matter of being a senior. It's just that I've chatted before you. It's not a matter of being senior. Under throughput accounting, labor cost is considered to be what?
it's part of the conventional cost.
Fixed.
It's considered to be fixed cost, isn't it? So
Yes.
under this particular circumstance, we are not looking at the labor cost from their respective angles. We are only looking for what is the fixed cost. Okay, we assume that the labor is not going to be varied. So what is the fixed cost based on the what? Based on the 1 unit that we are using. So we are just apportioning the fixed cost, assuming that everything is going to be the same for them.
Okay, all right. Point well noted.
Okay. So the labor cost is considered to be what? To be a fixed cost. So we are not apportioning the labor cost as if they are individual or they are variable. No. So what is the total fixed cost? The total fixed cost is 4,920. We are going to be incurring these costs for what? 240 minutes. So how much are we spending per minute in terms of fixed cost? So we just share it as if the fixed cost is going to be spread among them based on what? Based on the same what proportion. Okay, I hope that is fine now. Okay.
Yes, sir.
Okay, let's move on to the second one. We are having the 0.5, no, 0.25.
0.25.
Okay, 0.25 multiplied by divided by 0.205. What are you having? It will give us 1 point something.
1.22.
Okay, 1.22. The C is what?
That is
0.2.
0.2.
Okay,
divided by
0.205.
205. We might be having 0.9 something.
9798.
0.98.
0.98. Okay. The D is
0.3.
0.3.
divided by 0.20.
1.46.
1.46.
Okay, 1.46. Okay. Okay. So right now, if you calculate this on total basis, how are you going to be explaining it? A total basis. If you calculate it on total basis, how? But you can also calculate throughput on total basis anyways. Let's come to the total now. Okay. The total is all you do. We are looking for the contribution per unit, isn't it? Contribution per minute, not unit.
Yes.
Okay. So the contribution, what you do is you add their total contribution. What is their total contribution?
You
What
mean
is
the contribution per bottleneck, the total?
No, this one. I want to confirm which you are going to be getting. You are going to be getting the same as adding the same thing over here. Okay. You will be getting the same thing like that. So just add
It's
the
the same thing
contribution.
though. Yes.
Okay. So just add all of this one. It's the same thing. Okay. So this total contribution here, 0.8, 0.5, 0.6, 1.8. What are you having?
0.7.
Okay.
3.7.
Okay. This 2.7, the first one you are using 5 minutes. So what is the respective minutes that you are using for all of them? The total of that one too. So the contribution of 2.7 is giving us what?
16 minutes. The total
That will be 16 minutes.
So it means that the total, if you want to average the contribution, that will be what? You can see that the contribution will also be different, but you are saying that you are making it average. What is the average contribution per unit? Okay, so you look at the total contribution per unit. Total contribution per unit will be 2.7 over what? 16, isn't it?
3.7.
Okay, 3.7. I'm sure it's the same as if you add those ones.
3.7 over 16.
3.7 over 16. Okay.
It's not the same when you get 0.23.
Okay, but if you add these ones, you'll be getting different answer. Okay, this one is still okay. So that will not
When you
be
add those ones, you get 0.91.
Okay. So just do your total contribution. The total contribution of 3.7. You are getting this one by using a total minute of 16. So that will give us 0.23. Okay, 0.23. So what you do over here is the throughput accounting ratio on total basis will be 0.23 divided by 0.205.
Giving you 1.12.
1.12. Okay. 1.12. So this one, you are going to be producing, isn't it?
Yes.
Okay, because the return that you are getting is higher than this particular one. Okay, so for every, let me say, for every 1 cedi that you are going to be using for this particular one, you are going to be getting a return that will be 1.1 something. So it means that the return can pay the cost or the labor cost by 1 point something there. Okay, you can actually, let me see what we are getting as a profit over there. So what we are getting as the total profit over here is
Total profit is 840.
840, isn't it? Okay.
Yes.
So that 840 is, so the total, let's come to this one. You can also calculate this one like this. Look at this one. 2580 is a contribution, isn't it?
Yes.
Divided by 1740. What are you having?
1.48.
Okay. 1.48. Okay. Okay, which is higher. Okay, there's no problem.
That contribution is not the throughput contribution. The 2580
is the total contribution, which we have taken a labor cost out of it already.
Yes.
So instead of us adding a labor cost to this one, we have taken it from this one. So it's the same thing.
Okay, all right.
All right. So it might be because of some approximations that we did. Okay. So this is how you calculate the total. But please, if you are giving, just calculate it on the unit basis and move on. If you cannot go around with the issue of the total. Okay. It's not easy, but you will overcome. Okay. Okay. So let's pick one question on so this one, the question number 2, we have solved that one last 18. But I'm hoping that if they want to give you question on the throughput, maybe they can give you this one, because this one is somehow confusing. Okay. Please, let me just say this one, then we move on. If you are giving this one, let's come to this question. You can see that if they want to give you something over here, they can give you the total operating hours will be 7 minutes. They can give you something like 7 minutes, 5 minutes over here, and 11 minutes. Do you think that they can give you something like that? That the total operating time per unit is what? 7 for product A, 7 for product A, and 3 for product B, and 5 for product C, and 11 for product D. Do you think they can give you something like that?
Yes, sir.
Okay. This is the total operating time But the issue is the bottleneck, the one that you have limited time. It's not the two, it's only one of them. So you pay attention to the what? To the bottleneck. They can give you a total operating time, but the operating time is it relating to only one process. Okay, identify the process. Identify the process that you are having a limited time. The total that they are giving to you is the total hours that or minutes that you are using for each of the processes. But you cannot have a limited time on each of these processes. One of them is going to be having a spare capacity or maximum capacity, but one of them will be having a limited capacity. So your bottleneck will be attributable to to the limited factor. If you have 100 hours a day and someone is bringing a work to you and you have to spend 90 hours again, you cannot make a decision as to which of the work that you have to do first. No, you have the maximum, you have the time. So if you can do all of them within the day, fine, you go and do all of them. Or if you have the time to do all of them within the week, that is fine. You're not going to make any decision because you have the time to do all of them. So you do all of them. But if you have the time, that is, you are free for 100 hours, but the motorbike that you are going to be using, you have only 50 hours. You can use it for only 50 hours. Right now, you cannot just stand up and say you are going to be doing the work anyhow, although you have all the time. But the material that you are going to be using or the equipment that you are going to be using cannot help you to do the work for the full. So you have to now determine, okay, if I want to go to this place, how much will I be taking? So you now decide on the one that is going to be giving you a higher return within the 50 hours that you are going to be utilizing. So they can give you this question and they will give you the total operating hours, but you pay attention to what? You pay attention to the bottleneck. This is the question that I'm talking about because I'm not going to solve it. They are saying that overall hours per product unit. This is overall hours that you are going to be using to produce this one. It can be the machine hours, it can be the labor hours, it can be all those hours that you are going to be using put together to have the overall. But you cannot have limited time on each of them. What is the bottleneck? The question will give you the bottleneck. Or if the question is not giving the bottleneck, then it is possible that maybe the first one, the important aspect of the work, you can say is the bottleneck. Okay, so let's come here. The maximum demand of production for this and this is this one. The selling price per unit for this and this. The total fixed production overhead cost is 14, this one. This is absorbed by product A and this one averages with. On the production operation one of the production operations has a maximum capacity of 3075 hours, which has been identified as a bottleneck. Even if they are not saying that it's a bottleneck, if the question is not telling that it's a bottleneck, they say one of the production operations has a maximum capacity of this one. You just ask yourself, if I want to produce through this particular process, what is the maximum hours I will be needed to be able to take all the unit through that particular process? So you just come here as a bottleneck, the overall estimated production or sales product AB, okay, if the data is not given to you. The bottleneck hours required per product unit for product A and B are this and this. If they don't want to say this is a bottleneck, or they can say this particular product passes through 2 processes and they will give you the individual hours per unit on each of them. You have to now calculate the hours that you need for each of them to determine which of them is a bottleneck. So even if you are not being given that this is a bottleneck, this particular one is a bottleneck, you know the maximum hours that you have over here. So you ask yourself, you are having an annual demand of 144 and 54,000. Okay, for product A, I need 0.02 hours to be able to pass through that particular process for every unit. For B, I need this particular one. So this particular one is the maximum hours for the 2 products. So how many hours will I be using or how many hours will I be needing on that particular capacity? Then you have 0.02 multiplied by this, you get your hours. 0.05 multiplied by this, you get your hours. You put the 2 together and see whether the 3075 can be able to help you produce all the 2. If it's the 3075 is lower, then that particular process will be the bottleneck. So they will give you the overall, the overall is the total hours that you are spending. You might be having like 5 processes, and this is the total hours that you'll be spending on the 5 processes. That is the total hours. Each of these processes cannot be a bottleneck, cannot be a limiting factor. So the question will identify the limiting factor, and you now focus your what? Your calculation to the what? To the bottleneck. So please, this hours is not necessary over here. Okay, you are going to be focusing, your recommendation will be based on the bottleneck. We look for the what? The contribution for every 1 hour of the bottleneck. How much are we getting? Because it's the bottleneck that we are going to be utilizing. So if you are producing anyhow, you might end up getting a loss because one of the products, if you produce, it will give you more hours. You are going to be using more hours, but it will be a less contribution. Okay, so you now focus on 0.2 and 0.5 to do whatever the question will be asking you to do. Ignore the 0.25 and the 0.15. Okay, that is it. Let's pick one question on activity-based costing. Then we know that at least we have concluded, we have done something small on each of them. Activity-based costing, I will not solve that long one because I want to finish like 2 p.m. Okay, I have something to do. All right. So let's come to the 4. Charles, are you still there?
Yes, sir. Question number 4. Company makes 2 products using the same type of materials and skilled workers. The following information is available. We have product A and B. We have budgeted volume for them, material per unit for each of the product, labor per unit, and then additional information. 1. Fixed costs relating to material handling amounted to 100,000 Ghana cedis. The cost driver for these costs is the volume of materials purchased. 2. The general fixed cost absorbed on the basis of labor hours amounts to 180,000, so required. Using the ABC as method of overhead absorption, calculate A, the activity rates for each cost pool identified. B, the overhead cost per unit for each unit of a product A and B.
Okay. So this particular question, you are seeing it not to be anything, not to be plenty. Okay. The how plenty or lengthy the question is doesn't determine its difficult level. Okay. This particular question, it is straightforward, although it's plenty, but whatever they are asking, you can do it easily. The first one, whatever they are asking, you can do it easily. But let's come to this one. It's a very simple question, but you can use like 30 minutes without knowing what to do because what you know to do is not what you are saying over here. Okay. They are saying that the fixed cost relating to material handling amount to what? 100,000. The cost driver for this cost is the volume of material purchased. Okay. So telling us this one means that we have to now apportion this cost based on the number of material purchased, isn't it?
Yes, sir.
But do we have the material purchase in the question?
No.
Okay. General fixed costs are absorbed on the basis of labor hours amounting to what? 180. We need to know the number of hours for the 2 products and apportion, isn't it?
Yes, sir.
Do we have the labor hours here?
No, sir.
How do we go about the question?
So we have to calculate the quantity of materials used and the labor hours.
How did we calculate that? We don't have
Material.
we don't have the material here. We have only the volume that we are producing.
So we were given the cost per unit.
Okay.
So and the volumes were also given. So in calculating the materials, the unit of material that we bought, we'll divide the cost per unit by the units produced.
You divide the
the volume rather.
Volume.
So if you are doing that, what are you getting? The volume given over here are in unit. They are in units. They are not in Ghana cedis. If you are dividing in, that is why you'll be getting something like a different answer. This is unit dividing by this one. What are you getting? The 1,000 is in unit.
I think we'll multiply the material cost per unit by the volume to get the total cost of material.
Okay, and you do what? They say it should be on the number of the volume of the material purchased.
Yes, so when we get the total cost for material for product E, we'll divide it by, and then we also get the total cost of material
I'm interested
B
in
as
the
well.
divided by.
Yeah, okay, so we'll we'll divide the total cost of material A. We'll
Okay.
divide it by the total cost of material A and B and multiply by the 100,000 to get that portion.
If you are doing that, are you getting the volume of material purchased? The cost is the volume of material purchased. The volume of material purchased. Okay, what you are saying
Yes.
is the volume of material purchase. The volume can be the amount that we are paying for what? For the material or the quantity. Volume can be determined in any ways. Okay. Volume can be the amount that you are receiving or the quantity that you are purchasing. What you are saying is right. Okay. But it's just like, okay. Let's come here. Let's look at the top there. What is the question saying? A company makes two products using the same type of what?
Materials and skilled labor.
Materials and skilled labor.
Okay. So let's come here. The volume. Okay. The volume over here is this one. Let's come to this particular one. So let's assume that the volume, we are using the same material. So let's assume that the volume is now different. Okay, let's pick different figures. Okay, let's pick different figures. So a company makes two products using the same type of material and what? Skilled labor. But the quantity usage can be different. Okay, let's come here. They have multiplied something. Okay, what has been done over here is that they multiply the cost per the material multiplied by the what? The quantity usage. That's why they are getting the 10, isn't it?
Yes.
Yes,
Okay.
please.
Okay. So they multiply the cost, the material, the cost per the kilogram that we are buying, multiplied by the kilogram that you are using. They are gotten the 10, isn't it?
Yes, please.
Okay. Let's assume something here. Well, let's see that we are using 2 kilograms, isn't it? And we are buying at, okay, let's say we are using 5 kilograms. So we are using 5 kilograms and we are buying at what? 2 cedi. That will give us 10 cedis, isn't it?
Yes, sir.
Okay.
Yeah.
This one, so let's say that we are using 4 kilograms. We are using 4 kilograms and we are buying at what?
At 5 cedis.
At 5 cedis. Okay. So that will be giving us a 10 now, isn't it?
20.
Yes, sir.
Okay, that will be giving us a 20. Okay. If you want to look at the volume of the material that you are purchasing, the volume of the material that you are purchasing, that will be 4 multiplied by what?
2,000.
Okay, 4 multiplied by 2,000. And this will also multiply by what?
5 by 1,000.
5 by 1,000, isn't it? Okay. So this will be 5 multiplied by 1,000. That will give us 5,000. And this multiplied by this one will give us 8,000. So you can share the cost in that particular manner also. But the volume also, the amount that you are paying determine the volume that you are buying. Okay, it is the amount that you are paying the quantity that you are buying is the amount that you are paying. Okay, determine the amount that you are paying. So the volume can also be determined by the amount that you are paying. Okay, so what you have to do is if we assume we don't have this issue here, if we assume this will be 5,000 against what? Against 4,000, isn't it? Against 8,000 rather. This is just an assumption. Okay, so we'll be sharing something like 5 over what? 5 over 13 multiplied by anything. That's just an assumption. Okay. You can also determine this one. This is a 5,000 that you are buying. How much are you paying for it? You are paying 2 cedis. So you can say, oh, we have purchased what? 10,000 of the material from this person. That is a volume. 8,000 multiplied by 5. That will also give you that particular figure. Very simple. So you are going to be sharing this one based on what our sister have said. The volume of the material purchase can also be determined by the amount that you are paying. So 10 multiplied by 1,000. What are we having?
10,000.
We're having 10,000. Okay. Then 20 multiplied by that. What are we having?
40,000.
Okay. We are having 40,000. Okay. So our fixed cost relating to the material handling will be shared based on the what? the amount that we are paying for each of them. Very simple. So we have the material handling cost. Okay. So we have product A, product A. Okay. Product A, we are paying 10,000 Ghana cedis, and the total amount is 50,000. So if you are buying a material, you are paying 10,000, and one you are paying 40,000. Which of them should have a higher share of the cost that you are incurring?
The
Around 40,000.
Okay. So you just multiply this by the 100,000. Okay. What are we having?
20,000.
So we have 20,000. Okay. So we come to the B over here. We have 40,000 divided by 50,000 multiplied by the 100,000. So we're having 80,000, isn't it?
Yes, please.
Okay. So let's count to the cost relating to labor. So after getting this one now, what do we do to the labor now? How do we calculate it?
So the labor will be, the total will be 45,000. And A will take 5,000.
Okay.
Over the 45,000 times 180,000.
Okay, that is it. Whatever you are doing over here, 5 multiplied by the 1,000 over there, the labor hours is part of it. So if you divide it by their respective whatever you are doing, you'll be getting the labor hours. So this is also 5 multiplied by this one, this multiplied by this one, and labor hours is here. Okay, so we will just do the same thing. So we have the fixed cost, the general fixed cost over here, the general fixed cost, the apportionment for the general fixed cost will be, so we have the product A, we'll be having 5,000 over 45,000 multiplied by 180,000. What are we getting for the first one?
20,000.
20,000. You don't have to worry yourself. Product B will be what?
160,000.
180 minus 20. And that will be giving us 160,000. That's all. Okay. Please, any other issue? All right. Tomorrow we are doing standard costing and budgeting. So I'll put the question together and you'll get it this evening. Okay. So standard costing and
Yeah, I know.
yes, please.
The requirement, you are done with the requirement, right?
Oh, sorry. But the requirements you can do it. Or it's not that the figure that you need.
Yes, sir.
The activity rate for each course pool identified. So the course that you have gotten, you just divide the course by what? By the respective unit that you have. But those costs are for 1,000 and this figure. So you just divide it by those figures. The overhead cost per unit, the activity rate for each course pool identified. So, okay, sorry, I haven't done it well. Let me do it like this. Okay, so the activity rate, this is how we go about activity rate. So let's come to, let me do that particular one. So let's have the activity rate. Okay, the activity rate. So let's come to the activity rate. So the first one, it will be the material handling cost divided by the total this thing that we are using, isn't it? So we have the material handling cost divided by the total basis that we are using. Divided by the total basis that we are using. So what are we having? The total handling cost is what?
100,000.
Okay, 100,000. 100,000 over there. 100,000 divided by
50,000.
50. And we are getting
2.
okay, we are getting 2. Okay. So let's come to this particular one, the second one. So this one, for every quantity that you want to get, is 2. Okay, you just multiply 2 by the unit that you are producing. Okay, so let's come to this particular one now. Okay, so let me calculate the cost per each of them now. So the cost per each of them. So I'm having cost per each of them. Okay. What are we calculating here?
Set overhead cost per unit.
Overhead cost per, this is not cost.
I thought you asked for the requirements for B.
No, this one, look at this one, the 100,000 divided by 50. They are all in Ghana cedis.
Calculation for rate.
That's the rate per material unit.
The rate per,
Material handle.
no,
Rate.
but I'm looking for this one. You can see that the figure that we are using is also 150. The 50 is in Ghana cedis, isn't it?
Yes.
Okay, so if you are dividing Ghana cedi by Ghana cedi, what are you getting? Are you getting something in Ghana cedi, or what are you getting?
CD will cancel CD.
Okay, so what are you getting now?
Unit.
What are you getting? What would be the 2? Well, how do you call the 2?
Senior Linus, I think the
2
50,000.
units. 2 units.
The 50,000 is not supposed to be in cities.
No, the 50,000 will be in cedis if you multiply. We are doing
In cities.
the cost per unit. Okay. This one is 10 multiplied by that one. That will be a total cost of buying the material, isn't it?
Yes, sir.
Okay. And this will also be a total cost. So we are Ghana cedi dividing Ghana cedi now.
Yes, so it's going to be units.
Okay. So how do we interpret the units?
So it means that for product A, 2 units are costing 10 cedis per unit.
Okay,
Oh, sorry.
2 units are
2 units, a unit is bought at 10 cedis, and 2 units are used for one of the product A.
okay.
Or the 2 should rather be in kilograms. So that we say that 2 kilograms of product A is used to material is used to use 1,000 units for product A.
No kilogram was given in the question. They gave units. I'm going to.
Telanos.
Yeah.
I believe we are working for the activity rate for the cost pool.
Yes, please.
So it's 2 cedis per each cost pool.
The rate is not always what? The rate is not always a currency, or if they are saying rates, it should not always be in money terms or whatever.
Okay.
Okay. But the figure that we are calculating is not 2 cedis. That's why I want to know, how are you going to be saying that one, or how do you interpret it? Just how do you get a 20,000? Okay, the figure that we have gotten is 20,000, 20,000. Okay, those were the figures that we have gotten. Okay, but
Yes, sir.
the activity rate, you don't do it for each of the product. You do it on total basis, and you multiply by the requirement of what? Of that particular one. Okay, now we are having 2 units, not 2 cities.
So it means that 2 units were purchased at a price for the total material cost to be 100,000 Ghana cedis.
No. That's not the answer.
Okay, sir. I'm thinking about it.
Okay, thank you. What are you getting? What are you going to be saying? The 2 units, yeah, we are getting 2 units, not 2 cities. Okay, 2 units, not 2 cities.
These 2 units are purchased at a rate of 10 cedis and 20 cedis each for product A and product B. And when we do that, the total material cost adds up to be 100,000 Ghana cedis.
Okay, but how?
Senior Linus,
Yes, please.
I'm beginning to have a certain thought. I don't know if I'm right, but let's see. And it says the first cost relating to the material handling amount of 100,000. And the cost driver for this cost is the volume of materials purchased.
Okay.
The volume of materials and not the price. So I'm thinking that if it's the volume of materials purchased, and then we're not giving the kilograms per se,
Yeah.
but then the volume of unit. Hello?
Yeah, we are together.
Okay. If the budgeted units are given to us, I'm assuming that it is material per unit. That is 1 kilogram as it is. So the volumes, rather, we should have been using the units as in produced, the 1,000 and the 2,000 to have done that calculation.
No. The material handling cost. Okay, the material handling that we are having is not based on the finished product. The material handling cost is not based on the finished product. It is based on the raw material that you have purchased. Okay, so if you produce 1,000, it might happen that the material that you have purchased, some of them got damaged and you have incurred a cost. So this one is the material that we're able to survive. This is the one that we have produced out of it. So the figure that you have to use should be involving something that has to do with the material purchased. So the figure that you have over here are based on the volume. These are based on the finished products. It has nothing to do with with the material that we are purchasing. These are finished products. So if you are handling where all the material, if you are saying that it is the material that we have handled that was able to do this one, the material handling cost will be will be incurred during the production. So what if some of material they got damaged and we have incurred costs on them? How do we share this one? No, we cannot share it like that. The 2 that you are getting is correct, but I want to know how you are going to be writing the 2 units as what?
So these 2 units, we can say that these 2 units mean that products A and B require the same kilogram per unit in in producing them, just that their rates are different. So because their rates are different and then the kilogram is the same, that is how come we have 10,000 and 40,000 for the two of them. And when you multiply this 10,000 and 40,000, that's when you multiply them by the two, that's when we have the 100,000 as the material handling cost. So these two units are the units multiplied by the rate to give us the total material handling cost.
Charge.
Hey, Linus,
Yes, please.
you have to conclude for that. If not, we will not. This one can take us the whole day.
Hello, sir.
Yes, please.
I think the two is kilogram per unit. Oh.
Kilogram
per unit, yes.
Okay. So if it is kilogram per unit, then you multiply by what?
By a certain
You
amount to
multiply
get it.
by the demand, the volume demand.
Then you get the total what? The total kilogram, isn't it?
Yes, please.
You cannot multiply
Yes.
by 10 because the 10 is per unit, material price per unit.
You have to multiply by a certain amount to get the time.
Who's the question?
Hello, sir. But because I think that the fixed cost was in cities, but the 5,000 that we had, the one that we divide by 50,000, it was cities per unit. When you multiply the 10 is material per unit. Then we multiply by the unit at the top to get 10,000, right? And then we multiply the 20 by the unit at the top to get 40,000. So when you add the two, you are going to have 50,000 per unit.
Okay. 50,000 per unit.
50,000 cedis per unit.
50,000 cedis.
And because the fixed cost, and because both their cedis, the 10 is cedis. Then you multiply by the quantity. So you are going to have 50 per unit. Yeah, 50,000 per unit. Then you divide by the amount.
Okay.
Then you get a 2.
You get a 2 cedis.
No, 2 per unit.
2 per
unit.
Okay. Okay. Okay, let's come to the interpretation now. Okay, let's come here. Okay, let's come to what did you get? Okay, what is at the top there? What is the cost at the top?
It's 10.
100,000.
Is a fixed cost, isn't it?
Yes, please.
Okay, and the one at the down is what?
Material cost.
Is a material cost. Okay, this is now the fixed. We are doing fixed cost per the material cost, isn't it?
Okay.
We are doing fixed cost over the material cost, isn't it?
Yeah.
So what it means that twice the material cost is what? Is 1 unit of what? Twice the material cost per unit is 1 unit of what?
The fixed cost.
Okay. Twice per the material cost is one of the units for the fixed cost. Okay. So this means that if you want to get your, okay. Okay. So this is 2 units. This 2 units is expressed in terms of the material cost. So 2 times the material cost will give us what? Our fixed cost per what? Per unit. So the fixed cost over there will give us, for the first one will be 20 cedis, and the second one will be what? Will be the what? 80 cedis. So 2 units of the material cost is what? Is 1 unit of the what? Of the fixed cost. So if you want to get this one, go and multiply your material cost by 2. That will give you the fixed cost for each of them. So the fixed cost over here can be said to be what? For the first one, the fixed cost per unit for the first one will be, we have 20. We have 10 multiplied by 2. That will be 20 per unit. So the fixed cost over here will be 20 per unit. That will be multiplied by 2, multiplied by 2. So this will now give you 40. Multiplied by this, you have the 80,000. And this one, you have your 20,000 over there. Okay. So 2 times the cost used on the material is what? Is the cost of the what? The fixed cost per unit, or the material handling cost per unit for each of the product that we are having. That is in units, not in Ghana cedis. Let's come to the second one too. The labor one too. The labor one too will be in units. Okay. The labor one too will be in units. So we have this figure here. Let me have, okay. Why do I have that figure? Okay. So let's count to the rate for the labor too. So activity rate for the labor. Activity rate for the labor will be the total cost. What is the total cost?
180,000.
180,000 divided by
45,000.
45,000. What are we getting?
4.
So that will give us 4. So this will now be 4 units. So 4 multiplied by the labor cost will give us what? The fixed cost for the total what we are producing. Or 4 multiplied by the labor cost per unit will give us the fixed cost per unit that we are producing. So if you count to the cost per each of the pool, we are looking at the cost of each product. So the cost per unit of the product. So I'll have product A over here. I'll have product B over here. So if I come here, the material handling for this one. Okay, we know that 2 multiplied by the what? The material cost. So the material handling will be what? The cost over here will be 20. And this will now be what? 40. Okay. The general fixed cost will be 4 multiplied by what? Of the labor.
5.
Okay, so 5. That will give us 20. And this one will give us what?
4 times 20.
80.
And that will give us 80. Okay. So we have 40 Ghana cedis here. And we have the 120 Ghana cedis over here. So if you multiply this one by, if you want to get this one multiplied by their total units, you get 40,000 as their share of the what? Of the fixed cost, which is a 20 plus 20. Okay, that is it.
I think that this the overhead cost per unit.
Yeah, that is the overhead that we have is material handling and general fixed cost.
Okay.
Yeah, the overhead is the material handling and the general fixed cost.
Hello, sir.
Yes, please.
Yes, please. Please, can you go back to what you said? You say when you get the 40 and 120, what will you multiply by again?
You multiply by this is the cost per unit. So how many units are we producing for A?
1,000.
So that is 40 multiplied by 1,000. B is what? 20. So 120. Okay, 2,000. 120 multiplied by that. If you put the two together, you'll be having your total cost.
Very good.
All right, so sinners, I'll see you guys tomorrow, same time, budgeting and what standard costing.
Very
All right, thank you.
Yeah.
Yeah. Yeah.
Thank you.
When will the video be uploaded before 4 p.m.?
Thank you, sir.
Depending on the conversion.
Okay.
Okay.